Good morning, traders. Anthony Crudele here, and welcome to NinjaTrader Live. Here we are on February 10th, Tuesday morning. Markets sharply unchanged again. It's the theme of the year, man. We love hanging around this anchored VWAP from the beginning of the year in NASDAQ and right around unchanged for the year, although it did fail for me yesterday. And I put in my note this morning, it's like the kid in high school doing the two-step. Right, you're kind of just dancing around the circle, right, until eventually maybe the girl pulls you outside of your comfort zone with some of her fun friends. And that's where we're waiting for the NASDAQ to see if it's going to get pulled out of this zone. Not quite yet. Quick look at the markets. I'll announce the panel. We'll get to the news. Markets pretty much flat on the indexes. Crude oil even flat this morning again, but it keeps
notching higher.
That's right. Gold, metals down across the board. Not a ton. Again, metals, I don't think you're going to have this clear linear path like you've had. I mean, two-way action. We'll talk about that this morning. Bonds up, long end, 116 print right now. We'll keep an eye on that. 10-year yield, 4.18. You would think that would help indexes. Not that it matters much. We've been in the same range, but we'll keep an eye on it. Dollar up against most things, but not against the yen. Yen is up a little bit this morning. We'll get to the panel, which I'm about to announce. All that later. Joining me in studio, senior economist Tracy Shuchart. Good morning, Shai.
Good morning, all.
Macro strategist Craig Shapiro. Good morning, bud.
Good morning.
And on the big screen, looking sharp as usual, my man Jimmy Cagnina, senior market strategist. What's going on, everybody? Everybody good?
Good morning, Naples. It is low volume, tight markets across the board this morning in anticipation of the big event at 2:10 East Coast time. We have the U.S. women's hockey team taking on the Canadians. It's going to be a tough battle.
Yeah, I'll actually watch that. I haven't watched much of the Olympics. I don't know. I don't know why I feel like I'm just disengaged from it, but I'll catch it eventually. It takes me a while to get into it. But good morning, Chet. Hopefully you're all well. A lot to talk about today. Before all that, Shai, the news.
So the big news is it came out yesterday afternoon, but it is all over the front page this morning, was Alphabet is selling sterling and Swiss franc denominated bonds for the first time, including a 100-year note. The company is offering 5 tranches each of sterling and Swiss franc notes with maturities ranging from 3 to 32 years for sterling and 3 to 25 years for the Swiss franc, aside from the 100-year note in sterling. This morning, they did get the Century Pound bond did get the highest bids among all of the tranches. I kind of went off yesterday a little bit about the 100-year note, but we'll talk about that a little bit later. Moving on, we have more in AI news. TSMC revenue jumps 37% in January as AI spending marches on. So demand for data center chips in particular is spurring TSMC to earmark as much as $56 billion in capital spending this year, which would be up a quarter from 2025. Distress watch. Big bankruptcies hit the highest rate since COVID. So big U.S. companies are filing for bankruptcy at a torrid pace, matching that level that has not been seen since the large swaths of the economy were shut down during the early months of the COVID-19 pandemic. At least 6 big companies have sought court protection every week during the 3-week period that began Jan 10th, a level that's only been matched a handful of other times since the turn of the century. So the economy might not be as spectacular as we think it is.
Craig's shaking his head. I told you.
I told you. Moving on, Goldman says that there is unprecedented market noise. The amount of moving parts in this current stock market environment, both the pure noise and the longer-term shifts, is so vast that even some of the most seasoned operators are taken aback. Goldman Sachs wrote to clients on Monday, the degree of information change and noise in this market is unprecedented. We're seeing thematic shifts produce significant volatility, which we have noted, but it was in their notes. And then just some side notes. We did have small business optimism this morning. It eased on economic expectations, slipped 0.2 points to 99.3, so not that big of a deal, but a little bit of a decline in small business optimism. Trump said that Kevin Warsh can stoke the economy to grow at 15%. That's an exceedingly rosy target, in my opinion.
Like GDP?
Yes.
Let's go.
Like, I mean,
Yeah.
Okay.
So just a little bit of pressure on the Fed chair nominee, just saying. Moran spoke yesterday, said the dollar would need a steeper fall to become a first-order inflation issue and that the Fed's balance sheet needs to be smaller, but that shouldn't preclude large-scale asset purchases during a crisis. So they're ready to go. And then just in some fun other news, Michael Burry posted a head and shoulders pattern on Palantir stock yesterday. So now he's doing technical analysis, and he says he projects the neckline break around $90 to $100 and a landing area between $50 and $60. A lot of people were making noise about that.
you don't think that's a troll?
Well, we know that he had puts on Palantir for his company, but I mean,
That smells like a troll to me.
it was just really funny.
He's trolling everybody. I mean, Plus, he picks the pattern, as Blake always says. It's
The least reliable
There
pattern,
you go.
absolutely.
I don't know.
And then
Smells a little funny to me.
it was the big talk anyway on Twitter yesterday, or X yesterday. And then moving on to news, or to data that we have today. We have 8:15. We have the ADP weekly employment change, not the monthly employment change. So that number, it's not that big of a deal. We'll announce it when it comes out. It's usually late. 8:30, we have import and export price index and retail sales. Probably not big market mover, and 10 a.m. business inventory. So tomorrow is going to be the big day with non-farm payrolls.
Yeah, and we will be here to cover it. Well, again, here we are, Craig. Well, market actually, it broke 10 points in the S&P. Breaking news, Shai. What happened? Why did we go down 10
We're
points?
We're crashing.
That's how bad it is. I mean, Craig, honestly, what's your take on this? I mean, we see it every day. I mean, you see vol continue to get crushed and every single day. Volatility can't pick up. I don't know if we're still in negative gamma. Maybe not. I mean, does it even matter, right? I mean, it matters. I'm making a joke of it because we're in the same prices. I mean, we cannot get out of this area.
Yeah, I think it's just that dichotomy we keep talking about with respect to the zero data expiry options and gamma positioning and all the capital that's flowing into those very short-term strategies. Obviously, yesterday being a Monday, you had massive zero data expiry options in every big tech,
Yep.
the Mag 7 names. They're just, they're dominating the tape. And plus you have the leverage ETF flows that are trading these names too, exacerbating the moves because of the options that are traded to it. So it's a lot of wild stuff. I think, what we're seeing now is, last week or last couple of weeks, we've seen this pickup in cross asset volatility and crescendoed into Wednesday, into Thursday, into the Google or into the Amazon news. And then all of a sudden, we stopped going down and then we rip back higher. Negative gamma works in both directions. And so the question is, why? Why did we do that? Are we out of the woods, or should we be looking back to what was some of the issues that were facing the tape kind of prior to that? And I think what we're getting to now is volatility has gotten crushed Friday and then again to yesterday, but we have data now. We have retail sales coming up today at 8:30, and then NFP on tomorrow and CPI on Friday. So I think it's hard for volatility now to keep moving lower ahead of this, which is probably why we're starting to get a crash here in the last 15 minutes, right? Where we fall, and you see the VIX has popped up a little bit here, kind of bounced off of low levels. So I think it's just that, probably just some positioning, maybe some hedging into the 8:30, and then again for tomorrow. But I think folks want to know, what is this economy really? What does it really look like? I think everyone who knows the AI CapEx story, people are getting maybe incrementally a little more concerned about the labor market. And so this will be a big data point tomorrow to get some of that direction. And really the run into this labor data hasn't been great, right? Last week, ADP, JOLTS, claims, all kind of moving in the wrong direction here. So I think the expectations are probably for weaker than what is being the survey, which I think is for 70,000. But we'll see. I think the market wants to get that number.
We did have Hassett come out yesterday and say, don't expect the numbers to be that good.
Yeah, we keep.
He said, don't panic on weak numbers. We're like
right?
whoa.
So obviously they've seen the numbers. The data was collected. It was silly that they moved it, but so just a sidebar. So expectations are low for big jobs numbers tomorrow. And then on another note, all 4 indices are in positive gamma today.
They are? Okay. Yep. I mean, they are working together, Jimmy. You have the indexes working together in an ever so small manner here. You've got S&P down nearly $10 at 69.73.5. NASDAQ is 25,310, off about 44 points. Russell's down nearly $3 at 26.93. And then you've got the Dows sitting above 50,000, 50,127. Natural gas this morning pretty much flat, off 12 ticks at 312. And then you've got heating oil off 22 ticks to 239. You've got crude oil up 19 ticks to 64.55. Boy, it's just flat out there, man. Gold is off $24 at 5,055. Copper, 48.5 ticks to 591 this morning. Silver off 71 to 81.52, and then platinum's off 26 to 2,090. Bonds, that's where the story is. Yep. ZB is up 14 ticks this morning, 116 print. We'll see what Jimmy thinks about that. 10-year yield this morning at 4.189. 10-year notes are at 112, 10.5. I work a bid yesterday. I didn't get filled. I'm trying to buy that market. It's just, it's like you pay up a few ticks. It's like the whole trade. It's like you can't even, I mean, it's just moving that little. But again, and real quickly on the dollar versus some currencies, Aussie's off a little bit this morning, along with pound and euro, Swissy as well. But then you have yen is up 1/3%. And Bitcoin is down a couple thousand points today. What's up, Shai, before we get to Jimmy?
I kind of wonder if bonds are a little bit excited here because Alphabet was so oversubscribed for the U.S. issue yesterday and for the sterling issue today. So I wonder if that is part of it as well.
Yeah, I mean, definitely could be. I mean, again, like I'm making a joke, but weak data. I mean, Hassett's telling you it's going to be weak. I mean, I don't know what to tell you, right? You got a bid in bonds. Jimmy, what do you think?
Yeah, I think the main story in bonds is they're listening to Bassett. And he's, with a terrible, non-farm payroll coming out tomorrow because we got to be on our toes here. It's going to put some pressure on the Fed. And I think the 30-year bond market's picking up on that. We're almost at a 116 handle right now. We're still at the top of the consolidation range, still tracking a 4.8 something cash yield, but it's the 10-year. It's not the 10-year auction. It's going to 7-year auction. It's going to do it today. It's what happens tomorrow, and I think it's anticipating it a little bit. But the story so far, I mean, everything is, as Tracy would say, is coiling today. I mean, the SPOOs have a 25 handle range so far on low volume. I mean, it's a really, really, really tight range. Even though we just have a couple of decent sized red candles in the last 10 minutes or so. But all of these markets are pretty tight, including crude, on what we've seen so far overnight. So there's some anticipation going on here and some pauses.
Yep. I want to go back to chat and talk about this. So the gamma is why this is from Jero, the trader. So the gamma is why these trend moves are substantial and needing no actual catalyst. Thank you. I was understanding why the mean reversion felt absent and just trending each way. This is why we cover negative gamma.
Right.
Because the dealers are going to chase price intraday. So glad you brought that up, Jero, the trader. That's why we talk about it each and every morning. The fact that all of the indexes are backing positive gamma. This is your court. Yeah. Talk to us about what's going on.
And also this idea of negative versus positive gamma, kind of different data companies have different views about it. Some people focus only on today's expiry. Some look at the monthly. So the levels can vary a little bit. But really, I think the main thing to know is that when we do get into a situation where we have negative gamma, it means dealers are trading in the direction of the tape in both directions. And so when we're in negative gamma, we can get moves that exacerbate both ways. And so when we're going down, dealers are selling with the tape. And then when we find a level and bounce off seemingly nothing, or we get to a -2 standard deviation move for the tape like we saw last overnight on Friday, when we bounce, then we go back in the other direction. Dealers are forced to then cover those shorts and trade with the tape in the other direction. And so they're buying with the tape in that. So I think just the dynamic of understanding the regime that we're in is important, because that can help from position sizing and kind of looking and saying, why are we moving? It doesn't really matter why we got to a level and we're going to move, and the moves are going to be accelerated when we're in negative gamma. Now we're kind of more into a neutral-ish gamma position. But if we were to start to fall again, we would be pushing back into negative gamma. So it's a little bit asymmetric in that regard.
Yeah.
Yep.
Yeah,
We got
if I could
anything
just
coming
kick
out here?
in.
No, I
Go ahead. We got a few more seconds for ADP. For the ADP, this is the weekly, not the monthly. So
Yeah,
this
I
is
know,
not the
I
big
know.
number.
But I saw you looking, and I see when Shai's looking, man, she's zeroed in, man. And she's laser focused. Sorry, Jimmy. I just wanted to make sure that she wasn't getting ready to say something. What are you thinking, Jimmy?
No, I'm just saying, I look at these Menthor Q 0 DTE levels all day long, and they are hot, man. They really tell the story of support and resistance and active targets all the time. We have this 0 DTE call resistance at in the SPOOs at 7,000, and we saw it tap it yesterday. Today we didn't quite get there, but it is keen resistance right now on those 0 DTEs.
Yeah. I mean, again, I use Pax's opening range trade as a perfect example.
All right. ADP U.S. private payrolls rose an average of 6.5 thousand a week in the 4 weeks.
So a
They
better
do a
number?
4-week average.
It's been grinding. I think last week was like 8,500. So it's been soft, right? We've been talking about less, 10 to 15,000 a week at most. Now we're kind of in the 5 to 10,000. It's not great. Not horrible, but not great.
Yeah, well, it's like the market. Yeah, it's
And they do it on like a
reflection of it.
rolling 4-week average.
Yeah.
It's very, now that we have non-farm back, it's not really as big
As
of a
big of a
number.
deal. Yep. So back to my point about understanding market environment, why we go over this stuff every single day. If you think about your strategy and what style that you have, so I use Pax's because it's pretty much the simplest, it's the easiest. Opening range, he likes momentum. If it's the high or the low, he goes with it, right? You can go back, and I've told him this. I said, the days that you have negative gamma on the opening range, high or low, those days just trend they're just crazy trend days, right? And the days that we're in positive gamma, the opening range trade is far less impactful. It just has less relevance just because of what's happening now with 0 DTE. And it's one of those things where I look at, context and nuance. This is what my mentor taught me. This is what Pax's mentor taught him. And when you look at market environments, depending on what type of strategy you guys have, some people have mean reversion strategies. Like I think the order flow guys, this is a great market for them because it's a two-way tape. They come in zero bias. Not to say that anyone comes in with a bias, but they're very neutral on the bigger picture. And when they see people get trapped on highs or lows, they look for the rotation and they're getting it. So mean reversion trades in this market are working very well in positive gamma. Now they're not working very well in negative gamma. In negative gamma, you want to look more if you're an order flow trader or whatever. You want to look for the pullback and for them to get trapped within that primary trend. And traders, I can't tell you enough. I've been doing this for a minute. Understanding your market environments and how your strategy and how the market environment is conducive to your strategy. That's where the money's made. When I finally started to figure that out, my whole career changed. I made a bunch of money in a period of time where I was just on top of it. And then, again, you get older, you don't want to do it as much. And, you know what environments are good or not good for you. And it's like I look at it in 2 minutes, I know if it makes sense for me or not. And so that's the goal to get to, right, is to become a better executor of your strategy. Don't worry about what strategy you're picking from everybody else that you're watching out there. Pick the one that works for you. Find the environments it's conducive in. Take advantage of those moments. And when it's not, like they always say, go touch grass. I go and hit balls out of grass. And it's a whole other story. But yeah, that's the point of this. Again, let's get back to the panel. We've got 6 minutes still to the Edge Report. Jimmy, I want to go back to you. Quick plug for the Menthor Q guys, because Fabio's our boy. Are these things free? Where can people get them? Put that, maybe we'll get that link in chat, because I know people are going to be asking about these levels, and they should have them on their charts. I do.
Yeah, all day long. It's just there's so many good levels that you could plot, and it's it's up to the user, right? You don't have to plot every single thing that they track, but I like to look at the 0 DT call resistance, the 0 DT put resistance. I like to look at That HVL level, that's a big level, especially when it's far away and you break it, because that just signals a shift in direction big time. And then they have a calculation called the 1-day max and the 1-day min, which is it's not really a 1-day max or 1-day min. It could go beyond that, but it's kind of an expectations level, right? Based on their formula. What do we expect the range to be today? And they kind of, straddle the chart. And those are also especially on trend days, those are great levels as well. So I use them every single day on every single market.
Now, like I said, chat's asking, where can they pull these from? Do we have this indicator directly on Ninja? Where are we getting them? Let's talk about that in the Edge Report today, Jimmy, if you can.
Will do.
Okay, thank you. Back to the panel. We'll go back to you, Craig. When I look at the market right now, I'm sizing up a couple things right now. I mean, energy continues to chip higher. We've talked about this. I mean, this is something that, Shai and I, we've got our thing. We keep trying to buy dips in crude oil. It's really been my most successful trade so far this year. And it's funny, it's been the smallest trade for me. It's always how it works. I'm not holding anything overnight. It is what it is. But, you got to be thankful that it's working out. But again, I just know that when I see it down, I look at it and I'm buying it. So again, you see the potential for inflation, I think, is going to eventually hit the tape. Is this something that the market's even recognizing? I mean, because I look at the bond market and I feel like this is going on here where we have a softer bond market, or we have a softer data potentially coming out, and the bonds are getting lifted. And I would think that when I look at this, a little bit stronger crude is not bad for a little inflation. Bond market getting a little bit bid should help stocks get out of this range, I think temporarily at least. But again, we don't see it.
Yeah, with respect to inflation, I don't think market participants are particularly concerned about a reignition of inflation. I think they see the crude market maybe getting a little bit better, but really not breaking down, not becoming too big of an issue. They know the administration doesn't really want to see oil prices moving materially higher. They see the consumer largely being strapped, and so they don't, the idea of a demand acceleration or wages moving higher is not something that people are too concerned about. So I think, and then if you look at like the true inflation numbers and some of the expectations, I think most people believe we're going to see lower levels of inflation from here. So there's definitely a chance to get tripped up if, the commodity market moves accelerate to the upside. I think the key for me is the bond market. And again, we talked about this with Donnie last week, just the puts and takes, right? The economy and some of the data on the labor market is suggestive of lower rates, and that the Fed's going to be forced into, the new Fed chair is going to come in, it's going to push an agenda of bringing rates down, it's going to bring the whole entire curve down, balance that with the supply. And the supply, yes, we've seen, big demand for some of the Google stuff, but there's still a lot of supply. Amazon's likely to hit the tape in the next few days. The Treasury's doing 3s today, 10s tomorrow, 30s on Thursday. We know Japan's raising, UK, everybody, there's a ton of bond supply. So those puts and takes. And so when we break out of a range in bonds, I think then we'll break out of a range in stocks. And so that's why this data is so important. If the data really starts to show deterioration and bonds rally, then stocks will break, will break out of this range that they're doing. I think, from my perspective, I think it's more concerning. I think if bonds were to rally, I'd be more concerned about stocks. Because I think it'd be more indicative of, okay, we've shifted into the cyclical parts of the economy, but that's the economy is not really supportive of that risk exposure. So that's why I think this week is very important. And plus on Friday, if we do wind up getting a little bit hotter inflation print, something that kind of postpones the Fed's ability to cut, I think that would also be a concern.
See, now in theory, I would think that would make sense, but this is where I go back to, like, if the crude oil market is chipping higher and we're not worried about inflation, I think that's bullish for stocks. It would say increased demand. It goes back to what we've been saying. If this is the greatest economy ever, why isn't crude oil rallying? Well, now it's finally rallying. And again, I go back to, if the bond market's not acknowledging the future price of inflation, or worrying about inflation in the future, and it's going up, to me, that's bullish stocks. Just because the mere fact that we know rates are going to go lower, they're going to try and run this thing hot. It's not running too hot right now. Why can't NASDAQ get going? Shai, we got a minute left. I want you to touch on that a little bit, and also just do a quick rundown on metals. We didn't discuss them much this morning. I don't know if there's much there, but give us the final word.
I mean, we're kind of obviously flat on metals. Not really surprising. We saw a big run up yesterday. I think the metals in general because they were kind of parabolic. I think we're going to see a sideways market. We have, and I've been saying this, kind of a sideways market for a little bit, which is good because if we don't see them entirely break down, that just sets you up for the next leg higher. But it gives you a lot of intraday volatility for traders, which is good. So definitely worth looking at those. Again, we do have that new silver contract that just came out yesterday. It traded like 400 and something contracts yesterday. Already overnight, we're at 3,100 contracts. So it's picking up some steam. I'd like to see those numbers higher before you try to jump in and trade this because the bid ask is still a little bit sketchy. But, something to keep an eye on over the next few weeks, certainly. And again, we have crude chipping higher. And, I don't think that, I still think this is a story for this year. I think we're going to see higher crude oil prices, especially in H2. And so it will take some months to kind of filter down into inflation. And if you look at Trueflation, their number is very low. It's like under 1%, which I think is not right, but we'll see. We have CPI on Friday, so we'll see what that number is. But again, even with crude oil prices chipping a little bit higher, that will take time to filter into the market. And so I think that starts showing up in, several months down the road.
But I think, again, in the short term, Craig, you and I will talk more about this because, you and I talk and chat a lot, but I think this is I think, part of the dynamic why the markets are stuck here. We'll talk more about it. Panel, thank you so much. All right, everybody, it's about that time for this morning's Edge Report. Take it away, Jimmy.
All right, let's start with the E-mini S&P here. This is a daily candle chart. We see this mega green candle that we saw on Friday. Continuation buying yesterday. A little bit of a pause today. We're pausing right at that 78.6% fib level measured from the peak high that we saw up here on the 28th to the peak low that we saw on February 6th. Important to note, we're above the yearly VWAP. We're above the yearly open. We're above the yearly open days low, and we're above that VWAP, anchored VWAP from the lows in November. And not only that, RSI is looking pretty good. Now, when you drill into the intraday chart, I have a couple days up here on the screen, and you'll see my MenthorQ levels. I cut and paste the website into the chat. You could actually literally apply these on a NinjaTrader desktop platform, or you could just go log into their website, and I believe it is a paid website to get the levels every single day. So, and they cover equities as well. So it's a terrific resource as well. But check out the 0 DTE call resistance and 0 DTE gamma wall. This is twice in a row where that 77,000 level was it. That was resistance. We wicked to it yesterday, and then today we couldn't quite get to it yet. It also corresponds with previous session's highs, obviously, and a 0 DTE gamma wall. So there's a lot of resistance up there as well, which means if we break through it, there's room to the upside. Right now, it's not looking too good. JAX2 is above that at 70.25 would be a next target up, and then all-time highs. Right now, we have a really tight range here, approximately 25, 26 handles. It's tight, it's coiling, it's ready to go. We're trading below VWAP. I'm going to look for that VWAP on the initial balance to see where we end up there. JAX3 is at 69.75. JAX1 is down here at 69.50 as targets go. Let's shoot over to crude oil. Crude oil is a great trade also. Let's take a look at the daily candle as well. We're above and outside of that old trend channel that I drew. We have my line in the sand here at 62.36. That aligns pretty closely with the 50% retracement from a support point of view. Decent sized wick at the bottom of today's candle, no wick at the top. We're approaching that 23.6% as well, with September highs of 66.42 in sight. RSI is pretty good on a daily. Intraday, again, we have previous sessions highs defining the top of the conversation. Haven't really got there yet. London and IB high, that's at 64.63. We're trading above VWAP, though, pretty consistently ever since about 6 o'clock in the morning. Call resistance is up at 65 even. On the downside, we do have that 0 DTE call resistance all the way down here at 63. So there's some big levels here. We'll see if we can get a breakout to the upside. Let's take a look at the Bitcoin. The Bitcoin is, well, a little bit in jeopardy here. I mean, this is a daily candle on the Bitcoin. I have a piercing line of this big green Friday candle. That's 67,015. So we'll see if that holds. That's my support level. That would be a good target here if you're loading up again. We'll see how that goes. But again, a doji pause and then a sell-off a little bit here is not boding well for the Bitcoin right now. Let's just take a look at a two-day peak here, Monday and Tuesday on an intraday chart. We are trading firmly below that session VWAP. Now, so you could say deja vu all over again. This is exactly what we kind of did yesterday, and then boom, the bell rang and we caught a bid. I don't know. This is looking a little bit more negative here. We hit that one-day min already, that MenthorQ one-day min already. It's 68,000-ish, give or take, 68,500, I'm going to say. Previous session's low is right below that. And then below that, there's a lot of empty space, not a lot of targets here. On the upside, you got the VWAP here. That is going to be important for me, that session volume weighted average price. And then JAX 2 is a little bit higher at 7,500 and call resistance up here at 71,000 should this market catch a bid. That is the story of the Bitcoin, and that is this morning's Edge Report. Back to you, Deli and Shai.
All right, everybody. Thanks, Jimmy. Quick breaking news from Shai.
We had retail sales come in, and it was much lower than expected at 0%. Survey was 0.4%, and prior was 0.6%. So, and that was for December. So, bad retail sales number in December, which is normally a very big month, given the holidays.
Bonds rallied again.
Yeah, this is the thing. We're getting some data. The government's back open. We're getting the data points, and people want to know, is the economy as robust as the president claims and as markets are claiming, or is there a little bit of concern under the hood? I think this is a data point that is concerning. That's why the bonds, which were rallying into it, are rallying a bit more. Exactly. And the ADP number a little bit softer. And so tomorrow we get NFP. Now it's a different setup into tomorrow. Bonds are going to be rallying, dollar a bit on the back burner. Gold has a little pop on back of that. So we'll see if stocks can hold up. My sense is they won't, but tomorrow is much more important, I think.
I agree. I think this highlights it a little bit more because this bond move now is taking out multi-week highs. 2-week high. Multi-week, it's 2 weeks. I know I'm getting it's the highest prices we've ever seen. Next up, we've got a great guest. We're going to talk about that. Craig, thanks for being here with us. Hang on for just a minute, though. Shai, a preview of the guest.
So we have Ray Micaletti. He is the CIO and founder of Relative Sentiment Technologies. He has over 20 years experience at major investment banks, hedge funds, and asset management firms, where his primary focus has been on the research, development, and management of systematic investment strategies. So they have a whole set of data that they look at to look at markets. So will be interesting to talk to him about broader markets and what's going on.
Yeah, no, and it's nice to see that he's a Paisan too. So it's like we like bringing more Italians in here. So can't wait to talk about Ray in just a moment. But quick lineup for today. Big lineup for today. Of course, we've got the morning gap with Ray Micaletti. And then we've got Tape Talk with TTrades, CME segment. We'll go over that with T. Trade the Open with Merritt, Black, and Christian trading boxes. Midday Markets with Jack and Nick. And then Trade the Close with Leo, Kane, and a special guest. Who will it be? You must tune in to find out. Very mysterious here, all the things we're doing here.
It'll be exciting.
But what's not mysterious is Ray Micaletti. Let's bring him in. Ray, good morning.
Good morning, Anthony. How are you?
Doing good, man. So we just got some data, and bond market moved higher, was already moving higher this morning. I want to start there because this is something that Craig and I were talking about earlier. And I said, if you think about what's happening so far this year, you finally have some things showing up a little bit more in the tape. Equities we know are somewhat sideways. We got crude oil chipping, it's way higher. Now the bond market is as well. What does this mean, right? Like, talk to us about this market environment and what you're seeing here.
Okay. I'll talk about equities first and what the bonds might mean for equities. I know you were talking about that earlier. So I read your morning note this morning, and you mentioned that equities are sort of in this range, and they haven't been able to get out of this range. And that's sort of what the positioning has been saying. In the late fall, positioning became very neutral. There was a 2-3 week window in late November, early December, where positioning was bullish, the market rallied, but then it's fallen back into this neutral and even has like a little bearish tilt to the positioning. And whenever positionings like that, equities tend to just trade in a range, and that's what we've seen. They might drift, slowly higher, but it's very uninspiring. However, towards the end of this month, positioning looks like it could become a little bit more bullish. Now, with respect to bonds, now this retail sales number obviously is on the good side for bonds, but positioning has been bullish for bonds since late 2024, and bonds have not done anything. And I think that's reflective of the secular environment that we're in, where inflation will be sticky, inflation likely isn't going away, and the Fed won't be able to raise rates enough to quell inflation given the size of our debt. So long duration bonds really haven't been able to get any traction to the upside. Interestingly, positioning is turning bearish for long duration bonds in the very near term. That might switch back towards the end of the month. But in the near term, if that positioning turns bearish in an environment where that's not very conducive to bonds doing well, we might see bonds struggle in the near term. And if that happens, then maybe equities kind of drift a little bit lower until positioning gets potentially a little bit better near the end of this month, early in March. And then maybe we'll be able to break out of the trading range at that point in time. But right now, as you said, there's really no juice to take the market out of this range.
Yeah, it's like I made this the two-step, man. They're just sitting there in a circle, They're not getting outside of that little bit of range. So just your thoughts on if the bond markets continue to rally, do you think that is bullish or bearish for equities? Because they're finally starting to break out of a little bit of a range, and I'm wondering, is it going to spill into equities at all?
I think if the bond market is rallying because inflation is coming down and not because growth is falling off a cliff, and growth seems to be holding up, pretty well. The labor market doesn't seem to be as resilient as overall growth. But if the bond market's rallying because inflation doesn't seem to be a big of a near-term issue, then I think there are a lot of tailwinds for equities. Obviously, the Fed is purchasing assets. They might be lowering rates if inflation allows them to. The one big beautiful bill has all that deficit spending. Earnings have been resilient. So I do think that equities have tailwinds. And if bonds are rallying for the right reasons and not because growth is falling off a cliff, then I think that certainly that could take equities higher.
This is where the why matters more.
Right.
Right. Yeah. All right, Shai.
Absolutely. And so I kind of want to move over to the precious metals markets, or the metals markets in general. Obviously, we had huge rally all year. Last year, we kind of hit an inflection point. This year, it pulled back a little bit. But just your thoughts on longer term. What does positioning look like right here? Are we going to fall off a cliff? Are we going to move higher in just a sideways market right now?
So if we flash back to the end of 2024, positioning got very bullish for precious metals. And those signals tend to last on average about 10 weeks, where they're bullish about 10 to 15 weeks and then bearish, and they kind of ebb and flow. But interestingly, positioning was bullish all of last year for precious metals, except for a 2 or 3 week window around Liberation Day where they got bearish, but then got back bullish. It's sort of unheard of to be this bullish, positioned to be this bullish for that long. And it's still bullish. However, if we go back to right before when the government shut down, positioning was ultra bullish for precious metals. Positioning in gold, silver, the dollar, the euro, the yen, the British pound was all aligned in favor of precious metals. And that lasted from late September into about mid-December. And since mid-December, that positioning, although it's still bullish, is becoming slightly less bullish each week. Positioning in the dollar is no longer favorable. Positioning in the pound is no longer favorable. Positioning in the yen is no longer favorable. All that's really holding up the positioning is positioning in silver and positioning in the euro, which that's enough for the signal to be bullish, but it's not as categorically bullish as it was 3 or 4 months ago. So I think what that means is we might see, as you mentioned, it could be a two-way market. We're in a range where we consolidate. That seems to be potentially the most likely outcome. I don't think we're in danger of crashing, although, I don't want to tempt fate because, it fell 40% a couple Fridays ago, and don't want to, tempt the market gods or anything. But I feel like positioning is still supportive, and that positioning is set to last until at least the third week of March, where we could see, still a bullish window for precious metals. And obviously the secular environment it's hugely favorable for precious metals. Central banks are buying gold. China wants to settle bilateral trade with gold. And obviously, there's huge demand for silver. And silver is a huge component of all the arms race struggles between the East and the West. AI, robotics, solar, and electric vehicles, missiles, drones. So whoever controls the silver potentially controls the future. And so I think longer term, there's no question that they're moving higher. But in the near term, positioning still bullish, but not quite as bullish as it has been.
And I wanted to get your thoughts on all of this corporate debt issuance for all of these data centers. We know Alphabet, was oversubscribed yesterday, oversubscribed today in their sterling bond issuance. So, does this have any effect on Treasury bonds by any stretch of the imagination? Because there's so much debt flooding the market right now, right? Obviously, we have a lot of issuance in U.S. Treasuries. We've got a lot of corporate issuance. What does this mean for kind of the debt markets?
It's a great question. I don't really fancy myself a guru in the debt markets, but I do think that the market is probably right to have some concern. As we've seen, the AI trade has been languishing. Oracle, after they had those blowout earnings a few quarters ago and rallied hugely, they've been selling off since. From what I understand, these data centers have high turnover in terms of replacing parts, and they're not getting any return on investment on the initial iterations of those data centers. So I think the market is rightly concerned for that. And now that these hyperscalers are burning through their cash flow and have to take on debt, that could weigh those companies down. What it means for the bond market, I honestly don't know, to be honest with you. I'm not really informed enough to give you an educated opinion there.
I think the bottom line right now, Ray, is it comes down to you're seeing the bond market peak its head higher, and everyone's wondering, is it going to impact equities? And it goes back to the why. Why are we going up? Like you said, if it's less concern about future inflation, which I'm not sure that that's the case. I think look at soft retail sales numbers this morning. You come in, bond market gets bid up. Job markets have not been great. They've not been horrible either. Tomorrow's a big day. I mean, let's do a quick preview of that, Ray, because I think that this is now setting the stage to be an important number. Because when the bond market is sensitive to a retail sales number month over month that we don't really think, honestly, Shy was going to be much of a mover, right, and then it is, right? Now, it puts really a lot of focus on tomorrow morning's number. Let's preview that a little bit, Ray, because we talk about the why in the bond market and what that could mean. Let's go over some scenarios potentially of what you see leading into that. Good number, bad number, what would it do to the bonds? How would equities react?
So I think if we have a bad number, but the market still thinks that growth in general is holding up, but the labor market might be in sort of a stasis, and that makes the market think that the Fed might increase or accelerate its trajectory of rate cuts. I think that could be good for equities. Whether it would be good for the bond market, it might not be, because if the market thinks, okay, the Fed will be cutting rates because the labor market is not strong, but growth is strong, then that could mean that the market sees future inflation and it might hold long duration bonds steady or push them lower. And, I do think that commodities have been creeping up. Positioning is quite bullish for commodities. We're in a secular bull market in commodities. It looks like it's about to take its second leg higher after multiple years of consolidation. So I think that anything that would, and we've seen this, anything that would cause the market to think that the Fed is going to cut rates could negatively affect long duration bonds. Now, if the number is solid, where it looks like the Fed won't be cutting rates as fast, that actually could be good for long duration bonds. And it could also be good for equities in the sense that, okay, labor market's good, Fed isn't going to be cutting and spurring inflation, so bonds are stable, but growth is still fine. So I think equities could benefit from that if the number's good. If the number's bad, equities could benefit from the knee-jerk reaction of, okay, the Fed might be cutting rates, but the bond market in the long end might not respond that way, and equities might not be able to get too far on the upside.
Yeah. Well, we got to end it there, Ray. It's going to be a busy morning tomorrow, and I think actually today could be a busier day than most people think, just because the bonds are moving, and we'll keep an eye on it. It's the only thing really to talk about. Everything else is kind of range bound.
Right.
So there are a lot of bonds today. Ray, it's great to meet you. First time getting a chance to chat with you. Just followed you back on Twitter. Look forward to having you back on the show, my friend.
Oh, thank you for having me. My pleasure, Anthony. Thank you.
Chat, show Ray some love. Give him a follow on X. Check out what he's doing. Again, Shai, I think the why here matters now. And you got a lot of different scenarios as to what it could be. I look at it from a very simple point of view right now. If the bond market's going higher because data is not as good, I want to see the reaction in equities. You've already seen the strength in Russell this year. You've seen the strength in the Dow. Does that unwind? If that does not, then that tells me that the rest of the market is probably going to be okay, because tech is always going to find a way. Right? I mean, that's the way I look at it. And if you're telling me that those other sectors are going to do good, eventually, again, it comes down to the NASDAQ. That's where I see this. If the NASDAQ gets weaker in the next session or two following this, even with bonds higher and the other markets are hanging on, I think it pulls everybody down. If the NASDAQ starts to go bid, look out above, I think. I mean, I think this, again, I look at this scenario and go, I think we're finally to a point where we're getting ready to potentially break out of this range.
Yeah, I think, and actually, I am more focused on small caps. I know nobody likes the Russell, but I'm more focused on that because it's a broader range of the economy, because there are so many stocks in it, and it is small businesses. And so I think I'm watching that carefully as an indication of the economy. How does the Russell react to data, whether it be bad or good?
They're going to be the ones that are more sensitive to it.
Correct.
I think Carlos is asking, what do I think is going to happen today? And I think when I look at today, the NASDAQ, I mean, it's the bottom line. Yesterday's high in the NASDAQ really matters. You got the VWAP for the year. You got unchanged for the year right up, maybe not exactly unchanged, but the opening print for the NASDAQ right up there. Yesterday's highs, they failed from them. To me, the rest of the market's going to do what the NASDAQ's going to do the next couple of days. They're going to try and hold on to whatever they have. The S&P, I think, is still relatively bid. It looks like it wants to go higher, but without its buddy, the NASDAQ, I don't know. We'll see. Keep an eye on that NASDAQ today. Yesterday's high really matters. If we stay inside yesterday's range, who knows? It's a crapshoot into tomorrow. Tomorrow's going to be big.
Absolutely.
All right, Shai. We'll see you in chat. Thank you. All right. Next up, we have our segment with TTrades, brought to you by CME Group, where risk meets opportunity. T, good morning.
Good morning. How are you?
How you doing, man?
I'm a bit tired, but other than that, I'm doing well.
Tired? Are you West Coast? You traveling? Are you East Coast?
Yeah.
No one knows where T is. He's got no background. We have no idea. We're just like, who is he? Where is he?
Yeah, I'm trying to visit XYZ, so I'm out in LA.
Oh, you're out in LA. Cool, man. So we're going to get into the segment today, and one of the questions I want to ask you is, how do you determine which market deserves the most attention on any given day? Because we're going to go through all of these charts today, and I want to know, when we're done, which one, based upon what you showed us, is the one that gets T's full attention.
All right, yeah, we can go do that. What do we want to start with?
Let's see. What do you got up there right now? You got that
Well, I have
blinding
oil.
white chart. All right,
Yeah,
let's do oil.
the bright chart.
Oil it is.
Yeah. So we did talk about oil, forming a low here last week, which it did. But then we are also talking about this area here. So it's just range bound between this right now. I would favor the upside currently, but it is just a consolidation. So we'd be watching for it to trade into previous day high. And if we don't form a reversal there, then I would be looking for this high. I am still bullish on oil, and I do want to see it trade higher. It's just not favorable price action when it's just consolidating like this, right? Ideally, if it was going to trade higher, this Wednesday would have closed above this, respecting this area, and then we could have just traded higher. So not too much on oil, but I am bullish. We can take a look at gasoline and diesel. Obviously, gas has the strength right now. It's continuing this trend that we've been in, versus oil's consolidating, and diesel's actually pretty weak, just consolidating as well. So not super interesting, but I would be bullish on crude oil.
Yeah, I mean, to me, it's the best looking chart out there right now, and it checks all the boxes: fundamentals, technicals, and macro. Everything supports it, and I think it's important when you're looking at these commodities, just go back and what metals have been. They've checked all those boxes last year, and this year I think energy is checking those boxes, and I think you're 100% right. You know, if you're patient and wait for the pullbacks, you're not going to get them every day, but when you do, crude oil's been very responsive, T. I mean, we've talked about it each and every week. What we've asked for on the bull side, we've gotten.
Yep, we spoke about it since November, so it's finally starting to trend. I just want to see it actually reach for previous month's high, because that's the most likely for me. I always look for previous months. Any time frame I'm looking at the high, low, and then the EQ of it, so the 50% on a Fibonacci tool. And you can see we respect the 50%, and so I want to see us just trade into the previous month's high, and that's why I'm favoring the upside, because we have a swing point right here. As long as we remain in respect to previous day's range, I want to see us trade higher. So we can get into metals next. I would say these are more of the focused. I would say gold is the cleanest to me, and that's just because I just trade swing points. So we have a swing point here. We can look higher this next day. We still close higher this next day. And yet we have yet to take out this high here. So we just have these equal highs right here from this previous high and yesterday's high. So I'd like to see gold trade into this level today. And as you said, you know, which one is the most obvious? This is the one that has the cleanest level that I'd be looking to trade towards. But we can see what else happens with the other charts as we go through them. So that's gold. It is stronger relative to silver. You can see that based off the daily open. This is a down candle, while gold is right at its daily open.
Yeah, I like gold the most too out of the metals. Although I do want you to take a look at platinum today. We had a really great macro talk the other day, and he was talking about how he thinks platinum will be one to lead kind of that next rally. I mean, it's like up like 250% from like last year's range, so it's still had a big move, but not quite as much as the other ones overall. So I would like to see what you think on platinum at some point.
Yeah, so here we are in platinum, just switched over to it. I do like the area we're at in this range. You can see we formed a low, pretty nice move higher, and I think that's what you're talking about. You know, we're up 50% from November, and then we retrace all the way back into that range. And so if we are going to go higher, I'd want to see a reversal formed at that previous month's low. And you can see we hit the previous month's low. Do we get a reversal? No, we don't get that aggressive move out. So then we form one more new low. All I'd be looking for here is I'm just checking to see, do we form a reversal? So I'd want to see this pretty much go and close over this level. If it doesn't, then we could just get another move lower. So it's more interesting, you know, once we get a closure over here, or we form an actual low and then we form a higher low. So I'm just looking for that basic market structure. Similar to here, if we form a low, looking at the low that follows that low. And then we can also take a look at copper.
Yeah, let's take a look at copper.
So, you know, similar thing with copper here. I do favor the upside on it as well. Not a huge fan of here's the low. I'm always looking for the following low, right? So we form a low. I wanted to see, did we form another low in here to trade higher? And we kind of drop a bit lower. So I'm not as much of a fan of this, as it's just more so consolidating. But anything on the metal side, I'm just not really looking short-sided. I'm only looking to the upside on those. So I don't really care for much of the downside price action.
Yeah, and another metal that I think it's been lumped in with the other ones just because it's a metal, but it's really its own market right now. And again, it's one where I think that you're going to start seeing the separation of the correlations. I mean, copper is going to have its story, platinum's going to have its story, silver's had a story, gold, and you know, and I know that we talk about looking at each and every single one of these metals as a group, but I do think that we're now starting to see more of the fundamental side of these things where they start to matter, and relative strength really does matter, because when you're going to look at these, if like silver is down, it doesn't mean copper is going to go down, or platinum. You know, start understanding, like, again, like if you're going to trade these, the relative strength, which to me is still, you want to, I think, more look on the long side. It's going to be really important in how you choose it. Don't use them as a leading indicator one way or the other. Moral of the story is, if gold or silver is going down, does not mean that copper or platinum will be. So do your homework.
I don't like to trade the one that is lagging, I would say. And that's a great way to look at it. If we just go back to oil here, right? If you take a look, diesel is very weak, right? And gas is very strong. So if you wanted to trade the upside, why would you want to focus on diesel here? No, you'd want to focus on gas. So it's just a very simple way to look at the market.
Yep.
But let's
All
go
right,
into
where do we want to go next?
dollar, since we're looking at mostly everything. So we
Yeah,
spoke
let's
about
take a
this
look at
last
currencies.
week when we had this move off this low, and then we're trading back up into this range. And I was just saying we wanted to see the phases of price, right? And so when I say phases of price, are we expanding? Are we consolidating? You know, what is price telling us? And here you can see we get a little consolidation, and then we take out this high here. And so that's where we can form reversals or at highs and lows. So once again, I'm just going to be watching right here. What do? We reach into the high. This next candle doesn't respect it, right? So it reverses. Now we're back into this area. And so now I'm going to do the exact same thing I did here, but right here. So I'm looking in this little gap here. Do we form a swing point right here to then trade back up higher, or do we not and we continue to fall lower, right? And if the dollar is lower, foreign currency is higher, and then you know how that goes. Most likely trading, euro, pound. I haven't really looked at yen much, but usually not a huge fan of yen longs just because it's so weak over the long term. But any foreign currencies you want me to look at?
Yeah, I would like to look at the Australian dollar.
Actually, I knew you
6A.
were going to say that.
Did you?
We talked about it a bit
Good
last week.
intuition. Yeah, I
Yeah,
like that
so-
market right now. I've been watching it.
Yeah, so once again, if we're just looking at the higher time frame, so if I'm on the daily, usually referencing the monthly, so we trade in our previous month's high here. So we just want to see how we react here, right? If we're going to get a continuation higher on Australian dollar, we'd want to see that move lower on the dollar, but we also would want to see this not form a reversal, right? So we don't want to see an aggressive move lower here. We want to see price either consolidate or form some sort of slow opposing move that we can then look to see a trade higher. So it's more so wanting to see what the dollar is going to do, but also we just want to see this not form a very aggressive move lower. But the structure here is pretty nice for it to trade higher throughout February. So could see a trend towards the end of the month or into the end of the month.
Yeah, traders out there, if you guys like trending markets, go and take a look at like these currencies. Like I've been following the Aussie. I'm not trading it, but I mean, you just see the clean moves. And Blake Morrow, someone who's on the network quite a bit, has got me looking more and more at the Aussie and talks about like if we really got weak in the Aussie below, I think he said 70, just below 70, I think he said that could impact equities. Again, all these different ways and how the markets are intertwined. It's always pretty interesting to me. But again, if you're trading metals and other markets like indexes, and maybe you're not having success, maybe you like a trend market that trends more, take a look at currencies. They tend to trend really, really nicely, and there's micros in those as well. Where are we going next, T?
Yeah, we'll head into the indices. So the main thing is indices had a very nice move, on Friday. And so we were looking for a continuation of that move on Monday. And now we're getting pretty exhausted is what I would say. So we have such a nice range that usually we're either going to form some sort of consolidation, retracement, something like that. My point of interest for today would just be our previous day high, because that's really what I want to see price trade into. And if it doesn't, then it's just consolidating. So if it doesn't, wait for tomorrow. But the only thing I could favor right now is the upside on indices. And that's just trading the continuation of the trend. So if we go down to the lower time frames, there's nothing yet that tells me that this is bearish. So I'm just going to continue with the bullish idea. And so with that, taking a look, we can see what does the actual intraday structure look like. We have this low right here. We haven't yet to take out, but the S&P did take out that low. So I would want to be seeing for the open, as long as we respect this low here, this could be the low that trades into the high today. So I'd honestly want to see if we hold this 8 a.m. hourly low to trade higher into this high. And then we also have this target right here on NASDAQ. So that's right around 25,510. So that is what I would be looking for on the indices today, is a move to the upside. And the way I would determine which one to look at is I just look at YM and NQ. Whatever one is stronger there, that is what would be my focus. Around the open, you'd find that out.
Take a look at RTY too. I'd like to see what's going on there. We've been talking about what's happening in the bond market. Got to keep an eye on the Russell, which has been really just grinding higher, 2,700 almost right now. So curious what you see there.
Yeah, so it does have a nice move, right? So you can see swept out its previous low right here, traded up into these equal highs. Now this is where I tend to avoid, because this is my swing low, and then we've traded up pretty aggressively into this high. I want to see how we react here. Now, we would say, hey, we can look into previous day high. We already hit that. So if we're going to trade higher, I'd want to see price forming a reversal similar to the other indices, just right in here, and the open confirm that and then get a continuation higher. So this isn't looking to me like it's a bearish reversal, just how it formed, it's very lethargic to the downside. So I would also still favor this to the upside. It's just at least into one new high, and then I can see how it reacts there. So currently there's nothing that's super obvious. It's more of just going with the trend and the structure there.
All right, we've only got 30 seconds left, but I'd love for you to pull up a chart of Bitcoin.
Yeah. So we can take a look here. So Bitcoin, I was talking about this real quick. Longer term, you may have seen it, I tweeted it out. I was looking for price to move from here into this area. Now I was looking at the 68K area to see if it was respected, because that's where I wanted to see if it would form a low. If not, I'm looking for around 50K. And so if we take a look at this, we have expansion lower. This didn't get bought back up, so we have this consolidation. So I'm looking right around the 67K area on spot price to see, do we form a low here and then get our move higher, or do we fall through this and then go make a new low? And that is really what will tell me. I'm not one to try to catch lows. You know that about me. So I will be letting lows form before I attempt anything. And then I look for a higher low. So if you see we haven't formed a higher low yet, even on the daily chart, I honestly sometimes prefer the weekly chart with that. So for me, it's still bearish, and I'm just going to be watching, do we form a low right here, or do we go and fall through that and make a new low?
I'm 100% with you here. If Bitcoin shows a retest of this low, it doesn't make a new low here and holds, I think the thing gets bid. And it's just, I have to wait and see. Can't do anything here just yet, but I do think Bitcoin does start to get on my radar. All right.
Yeah,
T,
I think
you're
into
the best,
the
man.
into the end of the month, it will be quite interesting. So I'm more so interested
exactly.
once we're towards March on it.
Yep, exactly. Let's see how the rest of this month goes because of that big monthly candle, and how the next couple weeks are in Bitcoin, I think, is going to be big. Because if it does hold, I think the rally could be significant. And if it doesn't, wonder what that looks like. Like you said, 50K or lower.
Yeah. I was looking right around the 49K if it fails.
Yeah.
So.
Yeah, exactly. All right, T, we do this each and every week. Everybody show some love for my brother T. Hit that like and subscribe so you never miss an episode of T and I here on Tuesdays with T, where we do our CME segment where risk meets opportunity, and we dive into all of the markets out there. And T just does some great technical work and hopefully gets you in the right mindset for the trading day. So again, like and subscribe and check out what T is doing on his YouTube channel. I say it every week, one of the best in the biz. Go check out his stuff. T, have a great weekend.
Yeah, thanks. Make sure to like and subscribe. We got to hit 200K soon here, guys. So
that's right, bud. All right, T. All right, everybody. Well, good morning, chat. Hopefully you're all doing well. Busy here this morning on the network. Couple quick recaps of things. Whatever that means, right? This morning we came in sharply unchanged again. S&P, NASDAQ, Russell, Dow, all pretty much unchanged. We did get some retail sales data earlier that was softer, that bid the bond market up a little bit. Got it back on everybody's radar. We'll wait and see. I think all it does is really emphasize that tomorrow morning, which is a midweek non-farm payrolls number, is going to be pretty much, I think, set in stone to be a busy day now. You never know, but I think the fact that the way that the bond market moved off of a retail sales number that our macro team didn't think was going to be much of anything actually tells us that tomorrow morning going to be busy. But focusing on today, again, not a lot out there. You see everything is kind of unchanged except for the bond market. Nothing else is really showing any sort of substantial move. And again, I think that's because we're leading into some data that we're waiting to see. Again, don't put your guard down, but you never know what today could bring. We also talked about how yesterday's high in the NASDAQ were pretty important key points in the market. You had the VWAP for the year and basically went right back to opening price in the year. So again, we're going to wait and see if NASDAQ leadership can finally take us outside of this range here in the indexes. And no two better guys to do it. As usual, on Tuesdays, we have Black Boxes, which is getting ready to trade the open with Merritt, Black, and Christian trading boxes. Gents, boys.
Gentlemen, how are we?
What's going on?
just admiring Merritt's beard. I can't grow anything, so.
Oh, me
Oh
neither.
man, it's getting so gray. It's just the gray is just taking over.
Are you even 40 yet?
I'll be 40 this year, my man. Got the big one.
Oh, shit. Oh, it's starting. Oh, buddy. Welcome to the party, pal. It's getting gray. I know half my head is white. I look at it in the mirror. I mean, it's unbelievable. Well, the other side's staying with color, so, I've got that going for me. I got a Mad Hatter look when I get older. It's perfect.
You got a cool stripe here going on.
Two-Face. Yeah, Tommy Two-Face. Remember that character on Batman? Yeah,
Yep.
It's my nephew. He likes to bust my chops. But so, guys,
Hey,
good
Crudele,
morning. Good
you
morning.
look good today, man.
Go ahead. Do I?
Yeah.
What am I missing here? He's giving me.
I don't know. I think
compliment.
black. I think it's the black. I think it looks good.
I don't know. There's something behind that statement.
I know. I mean, I'm. This is very questionable right now, Chris. I don't know what's going on. I'm looking around like, is somebody going to jump in the room? Like, what's happening here? No, but I appreciate
behind
that,
you.
Bear. Well, thank you. I was like, oh. So, Merritt, let's start with you today. Bonds getting a little move this morning off this data. Really, the only place I see any kind of action. Everything else seems pretty quiet. You and I have talked about crude oil quite a bit and how that market's been, just continues to chip away higher. I actually think Bitcoin, I don't see you trade that much in the futures, but I actually think that could start getting volatile here soon, coming off that segment with T. I actually have been keeping an eye on that to buy dips there. But, I mean, what are you looking at coming into today?
In terms of immediate opportunity, like I'm stalking it into the open, literally nothing. Literally nothing. In terms of bigger picture themes and things that are playing out and things that I kind of like to make a cadence weekly with you and chat and talk about is crude, right? We talked through crude for 6 months here. And so let's continue the conversation. What's not happening in crude right now? It's not turning around. It's not getting rejected after that initial test up into that 65, 66 area. It's just a nice, Christian knows this pattern, right? Nice little wedge right here, nice little consolidation. Yeah. It's probably holding some 9 EMA or something. I don't know. That's what all the cool kids seem to look at. But when a market reaches resistance and it doesn't get a sharp rejection, and it just hangs out and keeps knocking on the door and hangs out, that's a bullish thing. That's not a bearish thing. So I just wanted to add that color to crude oil. What are you seeing in crude? I know you've been following it closely.
I think the same exact thing. I mean, I'm just waiting for any sort of minor pullbacks I get. I probably get offline today, and I look to work the bid again. I continue to think they're a bid. I want to buy Bitcoin. And I continue to think that the bonds now are a bid. I mean, those are the three things I like. Equities, who knows? I mean, it just feels like, it's a crapshoot. But I think that the fact that those three other markets are moving, we'll see if equities become anything for me. But yeah, I'm with you. Crude oil is the trend that continues to work. It checks the boxes. I know you don't look at really the macro and the fundamental type of stuff, but Shai continues to tell me that it's there. And so it's supportive. Right. And when you look at commodities like that, it doesn't hurt you to know that that's being supported by it. And so here we are. And, and it's like, it's quiet too, Merritt. You don't hear anyone talking about it. Everyone's talking metals. Everyone's talking about everything else. No one's talking crude. He just keeps chipping away, man. I like those trades. Yep.
You're going to hit Jim? How dare you?
That's what he said.
Wow.
He's going to hit Jim.
Wow.
Unbelievable. Disrespect for Jimmy.
Wow. And you're going to your 40s? You should be more mature, young man.
I'm gonna go buy a Miata or something.
Oh, God. You'd pull it off, though. I could see him with the Miata into the country club. Convertible, of course. Red. That's how I could see it. Christian, what do you got today, man? Listen, shed some light on these indexes for me, buddy, because I think the NASDAQ is the one you've got to watch here. If it doesn't break out, I shouldn't say breakout. If it doesn't show leadership soon, I think the indexes are going to continue to be in this pattern. Russell and Dow might keep grinding higher ever so slightly. But without the NASDAQ, I just feel like the NASDAQ's sitting right where we opened the year. it's stuck in the first day trading days range of the year. We've gone nowhere. Hard to pinpoint where I think we're headed here.
Yeah, so let's just quickly touch on the overall structure. We were in a multi-week consolidation between this 25,400 and 26,000. We eventually broke it last week, had a huge decline all the way close to 24,000 on this big washout that software had. Since then, we had triggered a reversal. Guess what? Right back into that big 25,400 area, which we broke down from. We're consolidating here. We are, this trend from the bottom, we already have two higher highs, higher lows. So we are close to seeing a sort of end to this reversal here as we backtest this resistance. And you're right, how we react here moving forward will be key. Do we pull back? Is it bot? Do we create a higher low against Thursday, Friday's low? And then start to chew through that supply to eventually move back up? Or does the rejection take us back down to the lows? I don't think so. I do agree that industrials and cyclicals are the best sectors outside of tech right now, and metals. But it's just we need tech to turn around and reclaim this 400. Yes, it's doing a much better job at that. It was able to reclaim the 6918 area, 6900, and we almost shot right back up to the top of the range resistance. We're now consolidating. So the main objective for me for this next 2 days is to look for a pullback to buy. And here's the plan that I have for today. We saw a sideways consolidation in the overnight session. We pulled back only to the overnight lows here at around 290. We're attempting higher. So if we can continue higher, we do need some acceptance about at 400, 420 area in order to push up to 25,000. 560s area, maybe test that yearly open, monthly open. If not, we can start a retracement, which can only be a higher low attempt against that Thursday, Friday low. So if we do pull back, I'm interested in the 25,000, 110, 120 area, and then ultimately prior day low. For ES, it's a little bit of the same structure here. If we continue with this sideways correction, then we can reclaim this 69.93, 7,000 area, and then push up into prior week highs, the 7,020s. If we fail, then we can see, again, just a normal retracement back to 69.43 to look for a higher low or prior day low. Maybe the yearly open. I don't know if we'll get that. Maybe tomorrow for the news, but that would be a really good back test of that big breakdown area that I do think buyers can show up there. But like you said earlier, I think we might see a little bit of sideways structure, a quiet session because of what's coming tomorrow.
Yeah, midweek non-farm payrolls. You don't have that marked off on your calendar too often, but I do think it's going to matter to the markets. The markets are telling us that through the recent data that, again, we've not had a ton of data this year because of government shutdowns. Data has been delayed. Then we get this measly retail sales month over month in the bond market moves. And we've been moving off of some ADP numbers, and we know that based upon the response of those markets, that off of news that's somewhat minimal, I would say, that tomorrow could be a busy morning. And look, we look forward to it here as day traders. But before I let you guys go, a couple things. First off, everyone, make sure you tune in for the afternoon session. We have a special guest that'll be joining Leo and Kane. You got to tune in to find out who it is. So make sure you're there this afternoon for that. And for you two guys, I want a quick 30-second answer from you guys. You know, it's funny, Chris, you were in the on a different session last week, and everyone in chat always talks about how much they like you and Merritt. We see it in the emails as well. We really get a lot of great feedback from the two of you together. People really enjoy this session. I think it's special. They're all unique in their own right, but you two, what you guys bring to the table in terms of, you know, actually practice what you preach. Yeah, exactly. I mean, look at that. I mean, you know, there's so many things we could go here with your two guys' session, but specifically, people really look at this as how you guys have honed in your long-term skill. I think that's something that everyone has really noticed between the two of you. So quick 30-second answers from each of you. This is a question we get a lot. Before I hop today, I want to hear what you guys think about it. If you could give one piece of advice to traders trying to make this a long-term skill, what would it be? We start with you, Merritt.
There are different phases of development. and a lot of traders who want to be traders come in and they are trying to do the most advanced things, the most sophisticated things, and they gloss over a lot of those lines that are in the first couple chapters of every trading book, and the things that they maybe hear from some of us here on the network. If you were trying to be a pro, you name it, darts player, tennis player, golfer, whatever, you have to start with the fundamentals. Everybody's too good for the fundamentals for some reason in the trading world. And in fact, people don't really talk about what are the fundamentals, right? In that same way, parallel with sports. So I'll wrap it up here. I know you only want 30 seconds. Figure out the fundamentals. If you don't know what they are, Apteros Trading, ask us, we'll help you out. And get really good at doing the basics. Get really, really good at doing those things, and you can build a career off of that.
Chris?
Yeah, so to add to his on building the fundamentals, the foundational pillars, if you might consider it like that, is that trading success is really being about being stuck in the right feedback loop. So, like he said, identify your fundamentals, identify who you are. What are your beliefs about the market? Do you have a belief that it'll go up over time? Okay, great. You might not be a good short seller. Okay, that's part of building your fundamentals and your foundation. And as you start putting these pillars together, your strategy parameters, your risk tolerance, your belief about the market, your belief about yourself, how you trade. Are you a mean reversion trader? Are you a directional trader? All these things, that's part of being stuck in the feedback loop, that as you move forward through your journey, eventually you iterate and iterate, that you develop a process that is bulletproof, and over time, regardless of the drawdowns, can help you consistently achieve higher highs, both fundamentally, financially, and in your life.
I'm glad I asked that question. You guys are the best. I love both answers. Boys, appreciate you as always. Chat, show my boys some love. Hit that like and subscribe button. On our way to 200,000 subscribers. Also, the 1-year anniversary of the relaunch of NinjaTrader Live, which is March 17th, St. Patrick's Day. Hopefully, we're at 200K there. Boy, what a party it will be online. So please like and subscribe. Guys, I'll see you later. You guys are the best, man.
See you, brother. Take care.
Later, Deli.
I don't like signing off and like just being normal and nice with Deli. I like what we used to do with kind of the poking, I need to figure out. I got to figure out an angle. I need an angle. I need an edge on Deli.
I think you need an insider at the studio.
I do. I got to start. I got to get a mole in there.
How's everybody doing? Morning, chat.
Morning, chat. Pilates is the edge, Merritt.
This reversal from this overnight lows. Beautiful bounce right back up.
Yeah, I thought about buying that low. It was nice the way it just came in and took out the previous overnight low. Just wicked it. Super, super light delta on the down leg there. And I just wasn't ready to trade yet. I was still getting ready for the stream here and everything. So
yeah,
that's an important thing. Obviously, this trade would have worked nicely, but it's an important thing to share with you guys at home. Do not trade until you've fully gone through your process, your preparation, and you are officially at the end of the checklist of that, and you are ready. Don't just be getting ready and maybe you have the monitors on and you're doing something else and you see something and just like put a trade on. Don't do that. That's not a good long-term alpha.
yeah.
Bum, bum, bum. I was talking yesterday with a group of students, and we were kind of talking about how swing trade opportunities from a NADRO perspective, which is the methodology that me and my students focus on, they tend to come, and I'm really interested in Christian's thoughts on this. They tend to come for us in kind of clusters or waves, if you will. There tend to be times where, and I'm talking like non-correlated assets, right? I'm talking what's going on in the Aussie versus what's going on in soybeans and the metal space, and these different asset classes within futures. They tend to there tend to be market environments over a period of months or weeks even where it's just fertile ground for swing trading. The trade locations are really, really advantageous, and they tend to happen a lot of times in the same time. And then, like right now, there is kind of this void of really good swing opportunity across a lot of the asset classes from our NADRO perspective, right? It could be the perfect opportunity for other methods here. Do you feel that do you see that or experience that kind of clustering of swing opportunities across different asset classes, Chris?
Yeah, I think we're seeing that right now. Outside of tech, you have metals going up higher. You have cyclicals. You have financials. You have industrials, consumer staples, retail. Obviously, this is more on the equity side, but yeah,
same concept, different asset classes. Yeah,
we're seeing that right now for sure.
And so right now, are you seeing really fertile ground for swing opportunities? Or are you seeing what I'm seeing, which is a lack of great opportunity?
On the indices side, it is more difficult. I do see a lack of opportunities just because, this huge divergence between NASDAQ and ES. It's not, look, we've been in a range for multiple weeks here, right? It's not a swing trading breeding ground, like you say, because it's just 1 day, 2 days we go up, the next 2 days we go down. We need that to break for us to really start to get that momentum to continue and have follow through. But outside of that, yeah, you have these. How long did metals go up for? Just huge.
Yeah, potentially not over. Yeah. My thoughts on the yen. I'll bring over the long-term VWAPs here. Obviously, the yen is pretty good at getting beaten up to the downside. This move down, over the past 6 months, let's call it, has taken us far away. Like if you see this chart I'm looking at here is VWAP for the year. And so, here's one standard deviation, here's 1.5, here's 2 standard deviations. We ended the year around 2 standard deviations from our annual VWAP. That's quite a distance away from kind of the mean or the average, which we tend to, over time revert to and whatnot. So, you never know where that bottom's going to form, but from a price action perspective, okay, we put in this little shelf right here. Couple of little swing lows, and we kind of compress into it, break, come back, retest it. Okay, seller's still firmly in control. Whoops, got him. Ha! Got him. And so we retest that from above, and that is a bullish line in the sand just for a mean reversion type of play. I'm not saying I can't believe Christian didn't even react to that. Perfect. I stayed in character the whole time. He probably thought it was a soundbite. He probably thought it wasn't even me.
What?
Incredible. You can't even recognize the talent when it's just right here. Anyways, my goodness.
Yeah, you sound like that news anchor says, F it, we'll do it live. We'll do it.
Yeah. That was so good. Okay, all right, sorry.
I missed it.
Where was I? You seem a little distracted today, Christian. You seem a little like you're here, but you're elsewhere.
Oh, I'm sorry. It's just maybe because I am tired of hearing you talk.
So anyway, this ends up forming a pattern. I just walked you guys through the formation of and like the market psychology behind what? What is this pattern now? Who knows this pattern from here to where we currently are?
What, a failed breakdown?
It's
That's
more
what I
complex
see.
than a failed breakdown because you get a little extra on the right-hand side. This is the classic inverse head and shoulders, right?
Oh, sure, yeah.
Well, you
I mean, you
disagree.
have
Tell
two
me.
left side shoulders.
Does that like create a problem? Is that a problem?
Well, that's why I didn't see that. Typically, a head and shoulders is for a human, at least it's one shoulder on the left, one shoulder on the right.
But I don't think multiple shoulder structures leading to the head is a problem for the pattern. In fact, I would argue it makes it better. Anywho, we'll try to get through the yen quickly. I know a lot of people are not interested. So that puts in a risk reference. That puts in a price action pattern. We are extended, as I mentioned, from where VWAP ended last year. And so a reversion back to value, at least at whatever the heck that number is, spot 0.0666655. You know, I hate the yen numbers. I think if yen were to change its pricing, more people would trade it. I have that hypothesis. Anyways, so a reversion at least to here, if not to here, is something that's very, very feasible. And then we start to step through other time frames. Last quarter, okay, last quarter, the Q4 of last year, here's its value area. We tried, that's part of the breakdown. We tried to hold back in it, a little bit of back and forth across it, but we are seeing that we're unable to hold cleanly below last quarter's value. If we get to the monthly, bottom left, we can just we're inside last month's value from January, and we've essentially tested both ends, not perfectly, not quite, but we've essentially traversed both ends. So we're coming up here for another retest of last month's value high. And if we look at the week, you know, we opened below last week's value, which is this line here. We came back in, we retested, and now we're trending with the DVA, a little VWAP rejection here. We reached the other side, not enough. Now we've broken above last week's value. So to me, this market is solidly bullish across a couple time frames, looking for reversion on some of the highest time frames to test prior value and see what the reactions are up there. What would change that? What would change that thesis? If we, again, this 64,580 level is kind of a decent first warning. If we can't hold that, that's last quarter's value low and last week's value high. So that's kind of a decent line in the sand. And then below that, I would put it at that where that price action pattern is on the yearly, which is also last week's value low. So if we break down and start holding below last week's value low, I think the lows for the year are back on the table. Otherwise, bullish.
What are you interested in trading today?
Nothing. I am in a Tuesday NinjaTrader live stream rut. I feel like every Tuesday I come in, I'm hopeful that there's some really good opportunities, and I feel like it's been a Tuesday drought.
You know, I feel that for myself as well. Like on Friday's stream, I had 3 winning trades on the stream. Where's that love on Tuesdays? It's usually when by Tuesday we start consolidating, and that's where, you know, we just chop around.
Historically, Tuesdays have been my favorite trading days. That's when the weekly VWAP and its developing value becomes unique relative to the intraday, right? Because Monday, the VWAP is the same as the weekly because it's the first day of the week. So Tuesday, it's like, okay, we get a weekly DVA added to our mix of tools, for NADRO traders. And yeah, look, I'm not saying it's a big deal. I'm not seriously concerned about Tuesdays. It's just there's always that little extra pressure where you want to not necessarily show off. Maybe there's a little bit of that with our natural ego and things that we have, but you want to do good. You want to perform on these streams. You want to show good trading. And one thing that I've learned is that sometimes showing good trading is showing how to be a good loser, and that's what I've done the past couple Tuesdays here. So we'll see if we can get back to the better equity curve we've historically had on this stream.
Hey, Pablo, thanks for joining us all the way from Argentina. That's amazing.
Argentina, I've always wanted to go to. I want to do the whole Patagonia thing. I want to do it.
And we're open. Let's see what we get here. A little bit of a divergence here. ES is stronger.
Maybe we'll check out some NQ today. Join the dark side.
See what happens as we push up into resistance again. ES is trying to climb above it. That. I'm gonna be watching for if we get a pullback here into the supports shared on in the morning plan that I shared with you guys. I'm interested in longs. Let's see what we get here though. This is the first back test of a major breakdown area in NQ. And I would be surprised if we did not see a retracement from it.
Wow, NQ is fast. Chat, is NQ faster right now than it has been? Or have I literally been trading the S&P for a couple months here, and I'm literally out of touch with how fast NQ is? That's got to be a little bit faster than normal. Well, chat's giving different answers.
I think it's maybe just because of the open.
Yeah, I mean, I've been trading a long time. I typically have a pretty good sense of speed of the tape. I know we get a.
Well, you created price action, so you tell us.
Yeah, I know. We could quantify it. We could get. Where's my quant?
Mom, I need my quant. I do think we can retrace here. Where's Ollie? He's asleep still. Yeah, it's no touching here at the open. It's a little too volatile. I was not a quant. My quant is asleep still. It's pretty early up here on the West Coast.
Mm-hmm.
All right, there goes NQ. I think this is a little bit of a better follow through here. Let's see if we can continue. Oh, just kidding. Right back up.
I'm telling you, it is a little bit of a speedy, swipey open here. And we're almost 5 minutes in, and it's still moving like it's 8:30 and 8 seconds. I started trading at the age of like 17.
$2,000?
I was in the 6th or 7th grade at that year, sir.
Is this like the year 2000? Oh, you're saying you were in 6th grade back then?
I fell in love with trading in the 6th grade, and then by the time I was like a senior in high school is when I started actually trading.
So you knew about the stock market in 6th grade.
The teacher brought in the newspaper every day for like a couple weeks, and we watched, 3M and Microsoft and IBM and whatever prices fluctuate. And I made my parents that night after the teacher brought that in. I'd never heard of it. I didn't know what it was. I made my parents drive me to Books A Million, and I bought a book on markets and trading in the 6th grade and started studying it. I've still got that book. It's kind of like a sentimental thing for me.
Yeah, not much to do here at the open. I'm still watching here if we can get a retracement. Yeah,
The
me
book
too,
was
Logan.
Oh, I'm sorry, Christian.
What?
Sorry, I interrupted you. Go ahead.
Yes, please don't. So
Sir.
anyways, guys, like I was
Sir.
saying.
Sir.
All right, there we go.
I had my finger over the past 3 minutes or so trying to find a spot to short NQ, and I didn't like it. Yeah.
See what happens when we get to the overnight low. I would love a deeper pullback.
The name of the book was Rolling Stocks by Gregory Witt. That was the one 6th grade Merritt picked off the shelf. I liked the cover of it, I'm sure. It essentially taught me horizontal support and resistance. That's essentially what I got from that book, was that there was the thesis was like, look, there's these blue chip stocks that are kind of boring, and they tend to trade in kind of trading ranges over years, right? This was not like a day trading book. And he was kind of saying, look, you can kind of pick up more at the low end of some of these ranges that these big dividend paying blue chip companies are in. And yeah. Not a recommendation to get the book or anything. It was just that's the one that I started with. I'm still shook over how good that got him was. That was incredible. I'm shook.
Shooketh? Would love a little bit lower to see what happens when we get to this overnight support. ES is doing a little bit better. We're right in the middle of this, or at least for ES, right in the middle of this overnight range. So there's really nothing for me here. NQ's close to the bottom of it. So let's see if we can have a potential breakdown here.
I'm trying a little NQ short here. Just scaled
That's
some.
good spot.
That's either it or they're going to have a higher energy wipeout for this trade. And so that'll be it. And that's that. What's a way to scale out fast? Do you have hotkeys? Yes. If you're gonna, there's the low. Sorry. I got the little head fake before it. There is no faster way to execute than hotkeys. It's not even close. It's not even up for debate. Does everyone have to use hotkeys? No. Not everyone needs to trade real fast and change quantities fast and scale in, scale out, and do all those things. So, but if you are trading shorter term, you cannot beat hotkeys. And one of the magic things about it that people don't realize is that if you are using the mouse, your eyes have to go find on your monitor real estate where the mouse is on the screens, and you have to make sure it's over what you want to click. And if you want to click something else, you have to use your eyes, which you don't look at price action anymore or order flow anymore or your footprint chart anymore or whatever you're using. And you have to go find your mouse with your eyes, and you have to click the next thing you want to click. That is one of the big secrets about hotkeys as well, too, is you highlight a window, you know your window's activated, and you can keep your eyes fixed on what you need to do to make decisions with market generated information, and your fingers, you know how to, click a couple different buttons that your fingers are on without using your eyes. That's one of the keys of that speed as well.
All right, so NQ just made a new low versus the overnight low. Yes, has not. We're into the 260 support. Now to see if we remain range bound and bounce. ES is around the middle of the range, so there's really nothing there for me. If we form acceptance down here into support, then we can start a breakdown. But we need to see if we get follow through.
Alex, absolutely. You can use hotkeys to have various quantity buttons. I have quantity buttons. I have cancel orders. I have flatten all. I have toggle on and off bracket orders. I have buy market, sell market. Yep, those are the trading related hotkeys that I use. And for me, just as an FYI to people, those just a quick Google search or a Chat GPT will get you going on setting up hotkeys. It's not hard. You just choose the buttons you want. For me, it's control with my left thumb. Sometimes if I get tired of using the thumb, I'll rotate to the index finger. But the control with the left thumb, it's control plus whatever I'm doing with my right hand. That's kind of the engage button. And then on my right hand, it's depending on the platform. I'll just give you a standard one. It's all on the numpad. So typically with my index finger, I'm doing buy or sell market with the plus and minus. Very logical, memorable keys to use. Either the enter or the period is flatten, and then the numbers themselves are the quantities. The 0 is toggle on or off bracket orders, and the backslash, right, slash, cut it out, is the cancel all. You got it. Stream Deck has a problem. I have a Stream Deck sitting right in front of me. I use it, but I don't use it for trading. The buttons are problematic for trading when it really, really matters, and there's a lot of money involved, and it's mission critical stuff. Stream Deck will give you, you'll press it, it'll give you two presses. You'll press it, it'll give you 0 presses. It is unreliable in terms of a pure physical thing. It's nowhere as close to reliability as a nice mechanical keyboard or whatever. So Stream Deck's cool. I've got one. I use it, but it's not reliable enough and tactile enough for the high quality trading. Oh yeah, and by the way, mouse and keyboard got to be plugged in. Can't be dependent on batteries and Bluetooth. All right, so what are we thinking, Christian? We've taken out the overnight low in the NQ, which is what I'm watching here.
I think, yeah, if we start holding here and don't bounce, then we can get some clarity that it's ready to break lower. This initial bounce here, you could see a little bit of rejection. NQ is leading lower.
Well, it's like deja vu from one of the trades I took last week on stream. I was actually getting long off the lows, and I was concerned about this first standard deviation here, which is where my kind of definition of trend is. And so I agree, Christian, if we're holding these kind of 313 area, 310 to 320 area, let's call it, that puts us in a downtrend for the session. But if we break back well above that, then we're rotational for the session. We're back in the overnight range. That puts the upper end of the range back on the table, things like that.
Yep. ES is right in the middle of it. There's no edge for me here in ES. Yes, ME I usually take partials into 1.5R and then trail the rest into the areas I'm looking for. See how we react here. Yes is holding much better here. EQ can attempt a reversal now and see if that has followed through higher or if we get, yeah, oh, look at that. It's a little bit strong bounce here.
Mm-hmm. And there comes the order flow a little bit late, but it just came in.
Yeah, right off that 260 area. So that's 260 is what we really need to break to see follow through lower. So now from here, what I'm watching is if we can form, if we reject and form some acceptance to then indicate that we can see follow through lower. If not, then we are going to have follow through on the reversal. And then, like Merritt said, go back to the top of the range, which ES is looking like it wants to do that.
The lows, if you see on the weekly VWAP chart over here, the lows today are right into that weekly VWAP so far. Just tagged them.
Yeah, strong. See if it pushes back up.
Another short for me. Stop out.
Yes, it's so strong. Look at that thing. So far, we're in a correction through time. And since the overnight session, really since yesterday's power
Yeah, it was a
hour.
good one, sturdy gentleman. We just got these buyers coming in.
Yes, attempting to push back into that 93, 96, like 94, 96 range resistance. So if we are pushing up back there, then I want to see if we can form some acceptance and then set up a directional trade higher. So far, both remain in a range.
Bonds are really rallying.
Look at that. Yeah, it's strong.
Buccaneer, I don't think there's no answer. There's no blanket answer to that question, asking if there's good opportunities during the day versus do we feel that the open is the best odds? There's just no answer to that. It just depends on what are the best conditions for your trading style, and have you put in the work to figure that out, right? And of course, at the beginning, you don't know, and that's why you do what was Christian's advice this morning to Crudele's question around advice for a trader trying to make it or something, and he talked about you went a little different direction than I thought you were going with it, but the first thing out of your mouth was something about like iterating and over like oh, your feedback loop. That's what it was.
Yeah.
And it's like, you got to collect the data on your trading, right? I don't care if you use a spreadsheet or whatever tool or whatever, a Notion database, whatever. You got to collect the data on your trading and start to learn. Do you have a time of day where certain setups tend to perform best? Make sure that there's adequate sample size before you make that judgment. There's a lot of random noise in that data. So yeah, I can't answer that question for you, but I can tell you how to approach you being able to answer it for yourself. I personally do not have a lot of time of day, like, oh, this is the best time of day. For me, as a, for a NADRO style trader, scalping, obviously, the success of scalping kind of correlates with volatility. Like if you're trading in a market that's got good moves, good momentum, good clean price action, you can do well and will do well. And won't do well when a market's stuck in the mud and really trading real choppy and nasty. For my standard NADRO intraday position trading, things like that, there's no 2 a.m. versus the open. There's no standout time of day for me. Wasn't there divergence between price and delta at the bottom? Says Arthur. Yeah, there was a slight divergence if you look at kind of price making this lower low versus delta not. I mean, only making a low by a little bit of a tick or so. That's not a major divergence. It's just ever so slightly. They both technically made kind of a slightly lower low there. So no, that's not some kind of a divergence that I am looking for by any means. It's too subtle. I look for the bigger, more obvious things.
In ES or NQ?
That's in NQ.
All right, so ES is pushing out. Now, when we get that first pullback to create a higher low, that's where we'll see if there will be a period of acceptance or holding above this 94, 96 resistance. If it's supported, then that can give us a consolidation that can, if I mean, it can shoot up straight up, of course, but if we can form some acceptance, look at that, it's strong. Then we can continue higher into 7,018 is the next area of interest that I have. If above that, we have prior week high, but I don't think it'll be that easy. We have news tomorrow. NQ's into a major test here.
It just sucks when a market runs from below the second standard deviation, the negative, the -2 below it, all the way up to the +2 without a single minuscule pullback. Right?
Yeah.
Either you were stalking this idea and you were in from these lows, or there's just literally zero opportunity to, what did we kind of talk about? Well, okay, where that trend failure point, right? We talked about, I don't remember where, the 310 to 320 zone. What happens if we fail to hold below that 310 to 320 zone? Okay, we're back in the range. We go test the highs. That's what we talked about. But how do I need to access that trade? I need a pullback. I needed it to get into VWAP here and maybe come back to that 310 to 320 zone. Then I could buy it. Maybe there's weak selling on the pullback or something with the delta, and I get what's called an extreme fade setup for NADRO, and I can take it. If it just goes there in a straight line, I get no access to that idea, even though that is literally the idea that we presented, 20 minutes ago.
Yes, took out prior day high. NQ did not. So if we cannot hold this first higher low pullback, then we will go back into the range, remain range bound. If we create a higher low here in ES as we backtest that resistance, then maybe we can build a little bit of structure up here and then set up a continuation much higher, but have to wait for that now.
I bought this small pullback. I scaled some right there. Let's see this second 30 minutes of the day, the B period for you market profile folks. Let's see it take out yesterday's value high, yesterday's week high, the overnight range area. It's just a very ripe area for at least stop run. So that's I'm hunting stops here with this position.
What are you guys doing? About that low? Morning is done. Oh, look at John. Too easy, he says. Bought the Asian low and sold the Asian high.
You can apply at apterostrading.com as an experienced trader with a track record. If you do that consistently, John.
Yeah.
We'd love to back you.
So here's that higher low attempt. So far, we're holding a little bit sideways. This would be the third higher high on the 4-hour, which is really for ES, which is really what sees a top of a trend. What happens here? This would not be enough of a consolidation for me to consider a long for a sustainable move up higher. This is just a small, 5 candle on the 2-minute. On the 5-minute, that's
All right, they're really just about to
3
press this little
candles.
stop run or fail. Bunch of selling, but there's a little bit of absorption there. It's more selling. These type of setups used to be easier than they are now in my career of trading. Used to be when a market pressed up like that, you could just put the check in the bank that it was going to be the stop run, and it would just kind of happen cleanly, in a sense. Boy, these days, and there it is, boom, right there. There's the stop run, the big positive delta. And so I'm just looking for the end of, my goodness.
Look at that. Wow.
So I'm just looking for the exit door. We'll take it there. So notice my two trades today. One, I was shorting to go take out overnight lows. So some guy talked about he bought the overnight lows and sold the overnight highs. Technically, that's a better trade than what I've done here today. But what I did, just to throw it out there so you guys learn a different approach, was I hunted the stops. I shorted here and came out as we made those new lows and took out the overnight lows. And I went long here and I came out as we ran the highs from yesterday and all that good stuff. So a lot of different ways to do it. Oh, and going back to that point, sorry, I was trying to do a lot at once. So going back to, used to be, back in my day, you could hunt stops easier and cleaner. Nowadays, what my guess, and I always tell people, don't be this guy, and I'm kind of about to be that guy, but I think it's the algos. For years and years and years, I'm like, guys, don't do a cop out and say it's the algos. But genuinely, I really do think that there are simply, it's not necessarily the algos, it's probably the algos, around major areas of obvious stop runs. I believe that there are now, because of what a cleaner edge that some of these algorithms and whatnot have found that I've known about for a decade, there are more games being played. There are people disrupting that, manipulating it, trying to take advantage of it and whatnot, which makes for a messier trade, right? And that's all I'm saying. So it used to be easier to kind of hunt stops, which has always been something that I've liked ever since I learned about the thinking of the markets instead of just like numbers and bars and candlesticks and patterns, but thinking of the market in terms of participants and where they're positioned and where inventory is and where there's people that are vulnerable, where there's people experiencing pain. Lance Beggs was who first taught me to think of markets in that way. And then all of a sudden you layer in auction market theory on top of that, and that really shaped me as a trader.
All right, now that we're seeing follow through, waiting for a better pullback. Some consolidation up here. Because we can still shoot right back down. This is not enough. There really hasn't been enough consolidation here to form acceptance. This 3 5-minute candle is not enough. Or 2 5-minute candles for NQ. I think ES had 3.
Uyi2G Forever comes in and says, stop with the conspiracy theory. That was a regular breakout. I agree. It was fairly regular for today, but I was talking a bit more about the microstructure, if you will, the very, very short term. And just a pattern, an evolution and change of the way things behave on a very, very short-term basis today versus how they did 10 years ago. That's all. Way to go, muscle.
Oh, that's great. Oh.
Do you have a give back rule, American Muscle? My goodness. No, algos are not programmed on retail trading platforms. You and I, as more retail traders, can program our own algos, but those are not the things moving and making waves in the actual markets. That's just us little krill moving around the whales. Minimum track record, I assume you're talking about for Apteros. It needs to be, if it's really, really good, then 6 months is a nice threshold to be over. Sample size matters. If you only took one trade a month for 6 months, well, then we're not interested. But, sample size matters.
Oh, no. Okay.
What is it?
My short was too late.
It's about time we saw a down rotation.
Oh, that was funny. All right, so I tried getting in this short, but as soon as I say press sell, NQ dumped a little bit. So let's see if I can still get some partials here. Okay, so I got partials here into 1.2R.
Quite a sell.
This is now looking like a rotational if we continue lower. Remember, I was looking for that higher low pullback in ES, and I kept sharing that we needed some acceptance up here to sort of create a more sustainable structure to then create a sustainable move higher. And this little this 2-candle 5-minute consolidation was not enough. So I tried looking for a short here on my 90-minute reversal setup, but as soon as I got in, I was doing a market order. As soon as I got in, NQ dumped a little bit, so my order got filled a little bit late. I was still able to take, on that entry, I was still able to take partials into 1.2R. And so my risk is paid for. If we do remain in a rotational market, then that means NQ can come back down all the way to support. I won't be holding my breath for that. But, you know, we had the setup here that I was looking for. I just don't know if we'll have follow through. But my risk is paid for now, so I don't really, you know, when I take half off, I don't really care what happens after. I know it sounds weird, but
It doesn't sound weird.
no? Okay. I guess just people, you know, I tend to see people continue to stress about where price can go and if they can reach their targets. To me, maybe I've reached a place where I just trust my system that I don't care if it stops out now or if it does reach out to my targets. Like I did what I had to do.
B. Adam, Merritt, is day trading something that can bring consistent money? I mean, what do you think we're doing here? What do you what, like you, I have I've taught people how to day trade. I've worked on proprietary trade desk in New York City where, you know, everyone walks around making $1 million a year day trading. I mean, it's yes, you can make money day trading. Sorry to give you a hard time, but yes. Would this move be considered a stop run? It is in its own right, absolutely. Anytime you're taking out a recent swing or things like that, it's a form of a stop run. Heck, even candle to candle, you can see that sometimes where there's a capitulation candle and it seems like there's a reversal. There's a lot of people like myself and whatnot that are positioned, and it's a stop run if you go take out that wick, you know, of a candle like TTrades talks about and stuff. So absolutely. The more significant, the more higher time frame, the more multiple swing highs or swing lows that comprise the level that's getting taken out, the more significant the inventory correction is of stops being taken out and people being put on the sidelines. So yeah, the market loves to do this where, okay, we start the day, we trend lower, that ultimately becomes a peak into the weekly VWAP and fails below the overnight lows, failed breakdown. Now we're in more of a bullish posture, rotational to bullish because of the most recent failure, what we call the key recent rejection in our language, has happened off the lows. So you have a bullish slant to the market. It gets up to the highs, tries to start a trend, again, without much of a pullback. So absolutely coming in and taking out. And you saw how quickly that happened and just how much order flow got released during that period. That's absolutely a stop run of that 380 level. That's why you see the market now building right here. It's trying to kind of decide, all right, now going forward, is that really just a failure to break down 380? Or are we actually going to hold and sustain below 380 and then stay rotational, which puts 500 back on the, a 315 back on the table again?
I don't think he knows that, guys. Yeah, who asked me a question? I was looking for longs into support. We tested it, we rallied up, and then I was looking for a short at these highs. If we looking for a rotational market, but it looks we might not get that. If we form acceptance up here, like if ES can now truly see a hold up here, which is now a potential wedge, then that can now create a sustainable move higher into the maybe prior week high, which is something I'm interested in. But, you know, I need to wait for that structure. So far, we didn't hit it. There was a good opportunity for a short. And so I took it, and risk is financed. We're looking to see if ES can create a wedge here to then look for a directional long, because we didn't see any follow through so far into the break attempt back into the range. So if we're now going to form acceptance up here, and buyers are going to move up from where? From here, from here, and now here, we can imagine that a little consolidation here to create energy for that breakout push can take place, and then we can get a move up into 7,018, the next zone I have. Move my stop down to 0.5 R. So let's see if we can get a little wedge structure here in ES for a long. If it pushes out directly from here, there's no real way for me to manage risk on that idea.
Are you from the Bayou trades? Are you from a Bayou?
Are you asking me or somebody in the chat?
The chat. Bayou trades.
Oh, is that a service?
What? What did you say?
Is that a service? Bayou Trades? No? Oh, are you talking about the actual
You know
place?
what a Bayou is?
Yeah, you're talking about the place. You know, some people have their service as their username, so I thought that's what it was.
I just want to make sure.
What
that
did
you
he
know.
say?
I don't. You know, you out there in LA, you might not know what a Bayou is. I don't know. That's okay.
You might not know what a taco is.
That's right.
Where you're at, you know?
That's right.
So
has he answered yet? I don't think so.
When the EMAs are pointing upward and 9 and 20, why short? Because if we're in a rotational market, those EMAs will turn back down. What can it get me to get long after those EMAs are pointing upward? Well, we need acceptance at resistance. And so far, we're not seeing that exactly in ES. We did see like a failed breakdown attempt, right? We attempted lower and triggered a reversal right back up. So if this doesn't form acceptance, and the way I see it, a consolidation, a wedge here, and it continues higher, then really there's no way for me to engage on that setup unless I was ready to buy this potential failed breakdown.
Bayou trades. That is so. I almost said, I'm not even kidding. I'm not kidding. I almost said, are you from Lake Pontchartrain? I almost said that to you a minute ago. You would have thought I was some crazy stalker. I'm glad I didn't say it. That's hilarious. I've been across that. Isn't that the longest bridge in the United States? Across Lake Pontchartrain, I think. Anywho, the reason I ask you is because we read a cool book that I love, and I would maybe assume that that's why I wanted to ask if you were from that area. To the kids around Christmas time, It's the Cajun night before Christmas. Chat, do you guys know this one? The Cajun night before Christmas? It's like written in a Cajun dialect. And it's, about this little family. The kids are nestled on the floor in this little shack out on the bayou, and Santa comes, and he's got a skiff pulled by gators, and the kids love it. It's pretty cute book. It's a fun little take on the night before Christmas. Roo. All right, let's see. What was your question now that you've entertained me with my questions about your bayou?
See if we can come back down here, make a new low. This is where we can now start to form an acceptance or a wedge for my process here. We have a swing high on the 2-minute here, a swing high. We have a swing low. We have a lower high. We're now retracing to create a higher low. So we're forming that wedge structure here. If we hold up here and it completes and the consolidation matures, then we have acceptance, and we can now create a sustainable move into the next target at 7,018, and then maybe prior week high. If this fails lower, then I do think we're going to push back down into the bottom of the range. NQ can lead that move lower and bring us back down to 260. So let's see if that does take place. While Merritt goes to the bayou.
Austin, I was just about to sing that. You were ready with it. I was literally about to sing that. That's funny. The Bayou Trader had asked, do I use any initial balance or opening range? No, I use zero of those things. Look, that's a way for people to say, hey, from this start time to end time, here is a range of interest. And they treat it almost like us profile people or, different value-based people treat a value area high and low, okay? In my opinion, and I don't want to step on any toes, there's different ways to make money, and there's all kinds of stuff out there. In my opinion, a start time and an end time, and then saying the high and low of that, is not as powerful, it's not as robust, it's not as, I'll leave it at that, as a value area that forms over volume, over time, and you get a distribution, and then you lean on the upper and lower edges of that distribution. So that's why I prefer to lean on value area based things instead of just start time and end time based things. So, everyone from Jim Dalton to whoever would potentially disagree with that. But that's cool. That's fine. Although, I bet if we got Jim Dalton on here and asked him what's more important, the initial balance or the value area, I would assume he would say the value area. So maybe he does agree with me. But anyways, I don't use opening range. Pax uses opening range. You could ask him or ask the NinjaTrader crew how to get the opening range indicator.
All right, so I took a little bit more off on this bounce here because we are starting to hold. So I took more off. I'm down to a 1/4. I'll have my stop at minus 0.5 R. And if we do push out, then I'll get stopped out on the rest. But this ended up being just a small green trade for me, most likely. We'll see what happens. We're wedging up here now. And Q's in a little bit of a 2-minute wedge as well.
So back to the stop run at the high and the questions in the chat, because it's an interesting sequence to discuss. Yes, absolutely. Offer Sailor. The fact that we ran as far as we did after the 150-point run or whatnot, as you say, absolutely. A pause, a pullback, these type of things are very common and expected. That's not what I'm talking about. I was talking about there is a very, very short-term precise moment where a market has an area where, just bear with me, it is vulnerable to a stop run. And I know how to recognize that, and it's there. And the market starts with a certain speed of tape to trade into it, and there's delta behind it and aggressive buyers and whatnot. My only point, guys, was that in the past, that used to just lead immediately to the break. And currently, there are more head fakes around those moments in time where you think there's the break, it's literally going to happen in the next 5 seconds. And then there's these washouts and drops and trickeration that occurs around those exact sequences. That is what I'm talking about. Yes, the market will pause after a 150-point run or different things like that. That's not what I'm talking about. Trickeration. I love that you guys called that out. That's a funny term that ended up being used a lot on like College Game Day and football and stuff. Trickeration. How many likes do we have? Only 399. I'm sorry, we failed you guys. We didn't do better to get more likes. What in the mechanism is that? Thank you, Karina.
All right, update on me. I closed that short NQ. I got long ES on the break of the inside candles here, which is a sort of like a internal entry against the wedge structure. And what I did is I put my stop under that recent higher low, so I can manage my risk against the breakout attempt, right? This breakout candle, I'm managing my risk against that with the stop right under it. And I'm looking to see if we can now push out into 7,018. SPY does have prior week high right above us, so I'm wondering if we can push out to that. I closed the short in NQ. I think the remaining, at how many points? It wasn't a full stop. I closed it as soon as I started crossing back above my entry.
Jeffrey, this is the only time I stream. I'm not really a streamer per se. Most of my time is spent focused on my trading and on my traders who trade for me, not streaming to the public. But Tuesdays are fun. It's cool.
It's because he's with me, guys. So.
He's with me.
No, you're with me.
That's what I'm saying. Yeah, I was quoting you. Yeah.
Okay.
I'm with you.
Okay. Yep.
He's cool, guys. He's with me. It's cool.
So now I'm looking for a higher high, higher low out of here, higher high, higher low, and continuation. We, to recap on what's been happening, we bounced back above the support, the resistance. We had a failed breakdown on the attempt lower. We created a wedge, an acceptance, a consolidation. This was telling us now that there was clear support from buyers from down here to here and then to here. So I took the directional move higher. I closed the short. It was a profitable short. So I'm financing that with this long. And if this higher high, higher low fails to continue forward or higher, then I will close my long here when this higher low fails. It looks like we might just be in a little bit of a chop consolidation and have no real follow through, which means then eventually we can retrace back into the bottom of the range. So we'll see. Yeah, if we don't push out, then I will close this.
Random question. Christian or chat, anyone here ever gotten into like land navigation?
No, I don't. What is that?
It's like being able to go out with like a map and a compass and navigate around and kind of use those tools and whatnot.
No. I'm in LA. What am I gonna do? I just first of all, if I go out in LA, I'm gonna,
My
something may
Tesla
happen.
takes me there, Merritt.
You don't do those kind of things in LA.
Yeah, that's what Google Maps is for, and what your Tesla is for when you've got power and you've got all the tech working.
Hey, Shab, morning. All
Morning,
right, so
Shep.
I closed mine. No follow through, so I just closed it. So it's pretty much flat on the day here.
So once again, Christian, going back to this whole like conversation about the stop runs and things and tying it in with like this last position you had and whatnot.
Oh, that's what you saw?
I have this theory around a lot of times if you have a range, if you have an established range, which we had coming into today's session, and you go and you peak and don't sustain on the edges of it, then there's like energy has been released from the market, and there is a lot more room for noise and chop and different things. That's like a little.
If it hasn't been released at the edge?
It has been. Once it's taken out the extremes of the
I
range,
see, okay.
especially on both sides, then you end up with a market where it's subject to a lot more noise than one that is yet to do that. You have, like, for example, when we were trading at the lows and you and I were talking about if this happens, we have a good indication of traversing to the highs, right?
Yeah.
Well, then once the highs get taken out, now you've taken out the lows and the highs of the established range leading into the session. And now it's almost like the market has kind of released the energy both ways and kind of failed to do anything substantial. And so now it's open to a lot more like noisy, kind of choppy stuff. It's just a little thing I've observed.
That does happen. And you know where that happens the most is at the end of hourly or 4 hour. I don't know if you look at those. I don't think so. At the end of those trends, that typically happens most.
Yeah, I heard you reference that earlier. You were saying like something is a common thing you see at the end of 4 hour trends or something. I didn't quite know what you meant by that.
So trend structure along the momentum filter that I have found that the market respects is the 9 MA or the 10 MA, whatever people like. But whenever we have a sequence of higher highs, higher lows into it, or lower lows, lower highs, the trend usually is done into the second higher high, higher low, or the third. So usually when we get into the second higher high, then you sort of have, from a trend structure perspective, you have an understanding that this is a place where a lot of more chop can take place, because either we're going to see a trend failure and we're going to get a bigger retracement. And so there's going to be choppy in that second higher high, higher low, or the chop resolves in a little bit of a higher push, which we've seen in ES, and it can see one final high, but it's usually into that area where we see a trend completion. Like on this drop, what did we have? And now it looks like it's just going to be choppy up here.
Yeah, so just putting a bow on that. Yeah, I have a geocaching. That could be something that could be fun. And yeah, I did hear that that's a sport. Orienteering kind of combines like I used to run cross country, so it's like you're running, running and navigating. Anyways, I just thought it was cool. I have a really, 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 really bad sense of direction. I mean, it is one of my worst qualities. I mean, like, I can try to drive into a neighborhood and take like a right and a left, and I will not be able to drive out of that neighborhood under my own power. I will not. It is insane how bad I am. I get lost in inside buildings if I go in like an office complex and have to turn down like a couple hallways or something. I don't know how to get out. It's bad. So yes, exactly. Alex is saying don't hunt. Well, guess what? I do hunt. And that's why I happen to be on my desk here, this guy. And that's why I have this guy. And that's why I'm learning to use this guy.
Survival skills with Merritt every Tuesday, guys. Because he needs them. So he's trying to
exactly.
pass it on to you guys. Listen, I grew up in the streets, so I have a good sense of direction. I had to, or else I'd get beat up in the wrong neighborhood. Chris, from your observations, do 1 hour trends typically resolve the same way as a 4 hour? Yes, all time frames. That's just how the market moves. We start a contraction, we expand, we start higher high, higher low. You see the second higher high, and look, if you go look at the drop in Nasdaq in last week, here's your breakdown right here. Right? This is your range breakdown here. And then you have a lower low, lower high, lower low, lower high, but then we trigger the reversal. And guess what? We're now into the higher high, higher low, higher high. If you go to the hourly here, I bet you I can find the same thing. Here's the consolidation. And then you have a lower low, lower high, lower low, second lower low, second lower high. Guess what? We trigger a reversal. Now it's a what? Higher high one, higher low one, higher high two, higher low two. The trend ends, right? So that's just how the market moves. And it's about just following the trend. And that's really what I try and show with all the trade plans that I share with you guys. It's identifying the higher time frame trend structure, where we are, what needs to happen on a lower time frame to tell you, hey, if we're in the first higher high, higher low, right? What needs to happen on a lower time frame, the internal structure, to then tell you, hey, if this happens, then on the higher time frame, we'll break out into the second higher high, and that's what you want to participate in. And look at this 2 minute here. Higher high one, higher low one, higher high two. That's the short I took in NQ. It ended, right? And now we're chopping around. So when this resolves, we'll have a new uptrend or downtrend, and it'll have the same sequence.
Hey, Jude, you're not wrong. He says, never, note to self, never be out of town with Merritt. A funny little side story. And this market is trying to hold a trend up here, Christian. It's
Yeah, it's forming
reached an
acceptance.
area of interest. We did release that energy. We did take out yesterday's weak high. We took out today's poor high. We took out those overnight highs. But we are just kind of holding. So if we continue to hold up here and knock on the door, then it's probably going to turn into an all-out type of trend with some higher targets. Anyways, funny tidbit. You don't want to go out of town with me. That's true. The first time my parents let me go on a road trip, I was considering colleges, and I was considering Georgia, UGA. And we had a family friend that was out there, and I was, 16, and they let me drive to Athens, Georgia, from where I lived in Alabama. And after what seemed like the trip was taking too long, I pulled over. This was a long time ago, no GPS, blah, blah, blah. I pulled over and into a gas station, and I asked the guy, I said, where am I? I'm trying to drive to Athens, Georgia. And the guy said, he had a big dip in, and he spit. Son, you're in South Carolina. So, yeah, you don't want me to be man in the wheel on the longer trips.
Where are you? I'm so sorry.
It's in the wrong state.
I'm not from Long Beach. I grew up far north, norther than that.
Well, there's a good song. Good Directions by Billy Currington. Who knows that one?
That's what Merritt won't give you. All right, looks like it's just going to be, we're still holding, guys. ES is still holding above 93, 95 area. So this can still set up a sustainable move higher.
Sustainable.
And Q still holding up here as well.
Yeah, it's holding. We're not seeing anything dramatic in the order flow, like sellers showing up and dominating. Delta's kind of gone after that one initial, and we talked about this. Was it a stop run? Yeah. And if we're holding back above that reference, it's just like we talked about in the daily chart of the Japanese yen. It's the same pattern. So it's holding at the upper end of the range, which I talked about in another. That's crude oil. If we go back to the daily crude oil chart from pre-market, that's the pattern there. We're holding at the upper end of the range. There's no super strong selling. That's not bearish. It's not a trade for me right now. It's not something I want to get involved with, but it's a bullish feature.
Might just chop around here.
Mm-hmm.
The structure is good, providing a healthy. We saw a little bit of a fell breakout earlier in the long I tried here, but now we're right back up. So it can now have follow through.
MEA, are you talking about in NQ? Let's look at a 15-minute chart. I don't even know how to look at a minute chart. Let's do it.
You look at Ticks for volume? Which one is it?
Volume.
What setting?
It just depends on the market.
Oh,
For the
so you have
S&P, like a
different for
3,000 volume.
for different instruments.
Yeah, because different instruments have like you almost try to normalize the volume per time, right? So if a market like the S&P, you might use like 3,000 volume, whereas the market like crude oil that trades less volume per session, you might need to use something like a 300 or 100 volume or whatever. It depends on the time frame you're trying to look at. So anyways, let's look at why does this platform change the bar width and the candle type and everything if you change the period? Why? Why would I want my chart to look different if I change?
Hey guys, while he looks into that, we have 1,100 of you here, and we have 487 likes. If you can help out the network, push those likes up. Those are rookie numbers. And then you had a special lesson from Merritt today, survival skills with Merritt. Those deserve a like. They're literally saving your life. So
okay, MEA. So here's what I would say on the 15-minute. Keep in mind I'm not yeah, it doesn't matter. So we have this range, which I would put, where are you?
where are you?
Here and here, coming into the session this morning, which started here or whatever, here. So that's kind of the established boundary. And that's why we were focused on stop run here, stop run there. So what do we think of? So the question was, hey, what about like the wicks and whatnot and the rejection we're seeing on the 15-minute from the upper end? Well, let's look at that compared to what happened on the lower end. The lower end said, hey, let's see what the market thinks about these prices. Let's see what participants find advantageous or whatnot. And they said, whoop, nope. Okay, so now we have the same test of a boundary of a range up here. Yep, they rejected it for sure. And then 15 minutes holding, testing it again. 15 minutes holding, testing it again. Now we have a bearish 15-minute candle forming and finally some selling delta over the past 15 minutes, which we have yet to see. But let's see where this 15-minute period ends here in the next 8 minutes. Let's see if it's another doji. But we have 1, 2, 3, 4 15-minute bars that have hung out at the upper end of this overall range. And that, my friends, is not bearish. Get me out of these time-based charts.
We are finally breaking lower.
Oh, man.
Yeah, failure up here. I mean, ES is really choppy here since 40 for the last 40 minutes. And Q a little bit of the same. Thanks for getting those likes up, guys.
Appreciate it. Chat today has been a pleasure. Appreciate y'all. Great questions, great banter. I've had fun. It's been fun. Setting volume for NQ. There's no answer. It's like, some guy earlier said there's like 20 different moving averages. Well, there's the the number of numbers there are is the number of moving averages there are. You can have a whatever number moving average you want. It's the same with a volume chart or a tick chart or time for that matter. You need the chart to fill a job description for you. What do you want that chart to do? Do you want it to be some type of short-term, lower time frame timing tool that maybe you're reading order flow on? Do you want it to be a higher time frame structural levels? Volume charts can be used for those. You just use bigger numbers for higher time frame structural stuff, lower numbers for shorter term stuff. So I was taught early on to use essentially 3 time frames. You want to have your really high time frame for just key levels, and that's really all it's used for. You have kind of a trading time frame where you identify the trend and various features and price action patterns and things like that. And then you have a lower time frame which you kind of use for entry timing, risk reward enhancement. Perhaps that's order flow or something for you as well. I kind of like that 3. A lot of people did that, right? What you have your triple screen or whatever that like Elder taught. You have 3D swing trading. I forget who wrote that book. That's 3 time frames. That's just what I was taught from reading a bunch of books early on. Hello there.
Yeah, this is done. Not much happening in ES. This is any tighter and it'll go away from the screen. NQ is leading lower though. I think this is the move now that I was looking for earlier. We're failing to hold up here. Now I can push back down to the bottom of the range. There you go.
And if you look at this from a market profile perspective, it adds just an additional layer of understanding of context, if you will. Well, here's the main time, the main area that this market spent building and trading yesterday. Here's the most time that price spent at a level around 69.87. And so that's why the lower test was right here where you run out of that distribution node. And the test at the upper end is where we ran the stops above that week high. And right now, where are we? We're just back in the meat of yesterday's profile. So it's just simply not interesting. It's not a place where I talk about having edge. I talk about my edge comes from the edges. And where are the 2 places that I trade today? From the lower edge and from the upper edge. I don't have any edge here in the middle of yesterday's profile. Hello there. Hello there.
Blutnik is talking. I was like, yes, just maybe another fell breakdown here. Oh, he's testifying.
Who is that?
Blutnik. Something's happening. I don't know if if Trump did confirm a change in the Fed chair. or is it still
Are you asking me that? You know better than that.
okay? Based
You
on the
know I'm a
price action,
dummy.
do you know
I'm a
if
dummy.
based on the volume chart that you have there, what can you tell me about the economy?
I can tell it's priced in.
Mm.
It's already baked in. Hey, yo.
Morning.
So, Phyllis,
The boys are back in town. Boys are back in town.
Right. How you doing, Merritt?
What's up, dudes?
I'm just sitting long gold right now. That's about it. I was looking for this 50-40 level yesterday, and we got it in like the first 10 minutes off the reopen at 6 p.m. New York time, and we're right back there right now. So I'm hoping we can continue to find supports here and indexes. I'm still looking for a little bit deeper of a pullback in the YM. I kind of like the structure of that market and got some nat gas limits. I had an ES long earlier today. I'm out of it. But yeah, that's what I got going on.
And I'm sitting short in NQ, the exact same spot I was short yesterday afternoon.
oh, blessed.
Upper edge of the range. It's a good location.
The
Bless
420s, because, I'm
Just
that
got to
guy.
find some sellers.
That's your spot, Nick.
Less.
It
Trade
is.
it till it works.
I'm
Or trade it till
unfortunately
it
sitting
doesn't
full
work.
size still because I was trying to get my wares. I get into the stream and get organized, and I missed covering one in this flush. But
All right,
we'll
boys.
see.
My time is up. I gotta go help Merritt know how to get to his car.
But I bet guys. Good
Bad
luck.
with directions.
Enjoy the day, boys.
You guys enjoy your sesh. All right, Merritt, we'll see you next week. Hopefully you find your way back.
Shut up. See
All
ya.
right, chat.
Enjoyed it, Christian. Good luck, fellas.
Everybody,
I
take
must have
care.
missed
Later,
some.
guys.
Bye, chat.
Did Merritt lose his car in a parking lot? Good stuff. Good stuff. Good stuff.
Well, thanks, boys. Chat, Jack, how are we doing?
Good, Nick. Like to see you short. I'm in no indexes today, so we aren't battling each other from different parts of the chart. I had some earlier, but yeah, I got nothing up here. Gonna do some adjustments real quick, guys.
Now we're good. That's the mic.
There we go. I forgot to pull it in front of my face. I take it out when I'm not on this. Just it's like in my face.
Well, let's see if they're going to give me another chance to cover this at the bottom of the opening range. I'm not loving this little push, but been kind of an interesting session.
Yeah, I mean, if we've just been sitting in a range, really, it's from last time I saw you at the close yesterday, not breaking too much lower, not breaking higher, right back to where we were yesterday. You know, not a market you want to be holding on too long for. You know, no big runners here, no breaks outside of range, just kind of balancing.
Yeah, this trade's risk-free for me now, so we're going to just let it play out. I was able to catch a small long earlier. Didn't held it because for some reason I just didn't think we were going to push. I thought we were actually going to go down a little lower. I thought we were going to kind of be maybe back down towards the 25 150s, but it stopped.
Yeah, I could see either or.
Yeah, it just seems like a consolidation kind of day. Classic.
Well, what did I
Unchanged.
say yesterday? If you think today's boring, wait till tomorrow.
Yeah.
I had a feeling we were going to have this type of action.
Yeah, I just was not feeling range expansion looking at the overnight volume and just where we were coming into the day. Just not much interest above yesterday's highs.
Am I looking for why I'm short or buy? If my limit is below the price, it's going to be a buy. So I'm looking for a long, just only at lower prices. Just kind of looking for us to pull back into where I want to get long. I don't want to be short up here. I don't want to be long up here. I want us to go lower so I can be long. The price is right on the screen. 53.42. Nick, do you ever take profit at 1R?
I mean, I don't know. My profit is always speculative, I would say, more than anything. As far as like where I'm going to exit, I react in real time. So I usually don't have specific like 2 to 1 R, like that's exactly like for me, it's so sporadic because I could be watching time and sales and, something I'm seeing could just immediately make me just mark it out of the order. So for me, and I'm happy to do that. Like I'll scale based on what I'm seeing or specific spots. Like when I entered this trade, I did not know my specific targets, like to the tick kind of thing where, okay, that's a 2 to 1. So I'm going to put one there. Like, no, I'm basing it more on structure than anything else. So for example, like my third runner in the event, we did get a nice little flush below today's range and actually break 350s here. My last one, I mean, I'd be targeting potentially the week open if we were to actually lose this range. But if not, I'm probably just going to cover all of it somewhere, hopefully in the bottom edge of this range, that same spot from yesterday. I literally had this exact trade yesterday afternoon if you missed trade the close. Exact same entry, 420s. And then was looking to cover somewhere in like the 370s to 360s. And that's where I wanted to get off originally.
Is where you were going to cover.
Mm-hmm. Yeah, if you guys remember, I was saying like I would love to get 380s, and we got a nice flush in the 370s, and then I got spooked out in the 360s.
Should we just take the same trades we took yesterday and
you're gonna get long at 335? Like when I cover my first.
I don't even have the NASDAQ on my screen right now. But yeah, I mean, to say, do we take 1R? Yeah, sure. I take 1R, but I don't often go into a trade with the plan that I'm going to take 1R. But many times trades don't go to plan and you have to adjust. The longer I'm in a trade, the more likely I'm going to take 1R. I don't get in a trade and immediately take 1R. If I get in and the trade is my way quickly, I'm looking for more than 1R. It's when I've been in a trade for an hour and we've gone nowhere, then I'm like, you know what? I'm going to take the 1R because at some point you're just really not getting a great move. And so you just take what the market's going to give you, or you really need to tighten that stop up.
So we can break the overnight view up here and get a nice push down to 280s.
As far as I know, NinjaTrader does not have an activity log, but I'm sure somebody could keep it if they spend enough time watching this.
Yeah, I'm waiting for someone to come out of the woodwork and who's been watching every episode of NT Live for the last year and just says, actually, Nick has actually lost money on the show. Well, it's like, great. Yeah, congratulations. Thank you for only looking at trades that are in a vacuum versus the entire.
Yeah, the 1 hour we're on here. No, I mean, sometimes I come on here and I'm in trades that are profit and they might turn against me, or if I come on here, I'm in a loss and they might turn against me, or it's kind of hard to. I mean, I do continue to stream other places, but it's important that, that you feel like you're getting educated by us. Are you getting educated? Are you learning things?
No, come on. All right, I'm just going to take one off. Oh, I didn't even get it off. Push back down.
Yeah, I got my little, you know what, this is theirs here. They gave me this. This is this nice big visual. You get to see how much money I'm making or losing in real time. You get to see the blood run to my face if I'm down thousands of dollars, or you get to see me smile if I'm up thousands of dollars. No, my emotional state rarely changes relative to my P&L. I've become immune to that. Which is where you want to be. You want to be immune to the emotional swings in trading. Find your rhythm. If you trade your P&L, you will lose. If you trade your system, well, at least you have a better chance of winning.
Come on, sellers.
Life's too short to be in a bad mood, especially on stream. Grumpy is not a way to live. Angry is not a way to live. You need to be in emotional control to trade. If you lack emotional control, if I see somebody that lacks emotional control, I doubt their ability to trade. Because that probably means you're a rather impulsive individual. Trading is something that requires you to be well above average to excel at. And so you need to be well above average in a lot of things in your life if you want to be well above average. You can't just be well above. You're not just going to be well above average in like one thing. You're going to be a thoughtful individual who carries themselves through many parts of their life in ways that you are trying to excel. It's not just like you're going to show up, be good at trading, and like be terrible at everything else.
Yeah, I think you just described my life in sports and everything else. Nick just being slightly above average in just about everything he did. Just, you know, that like C to B student in everything. That's me. That's where I sit. It's my sweet spot.
Yeah, I can't say I was ever a straight A student, but
nope. Yeah, and I wasn't the best athlete, but I was
just
you know,
good enough to make the
good
team.
enough to be dangerous.
I wouldn't say I was always like this. No, there's you know, I'm a full grown adult now. I like to say, I like my medulla oblongata has developed. You know, like I don't race cars at 100 miles per hour like I might have done when I was younger. Done, you know, stupid things. So I think everybody as an individual should develop, whether personally, professionally, and in trading. And if you find yourself not developing in areas, just do a little bit more reflection. And I don't know enough about brain science, if that's the correct word or not, but on the emotional side of things, so like, okay, when you think about trading and emotion, it's like a lot of it for me is reactionary. When you feel out of control, in a sense that you have to first of all know what your system looks like and what your trading looks like and how you really internally feel when you're just doing things like you should. You know, you're calmly placing orders, you're moving your stops appropriately, you're using the same amount of risk, you're not taking trades. Like that's your flow state. Okay, so first of all, you have to know where that basis of that flow state is. And then if you start deviating from that flow state, like for me personally, all it takes is like one little mistake, because as soon as you make one mistake and you're aware of that mistake, you have to avoid that. Otherwise, one mistake becomes two mistakes, becomes three mistakes, becomes a problem for your account for that day at least, or depending how big of the mistakes you're making. So like things like, I mean, for me, it's been one of the best things for my trading has just been paying attention to like not overreacting for time. If I take back-to-back stop losses, I simply stop trading that product. If I take 3 stops in a row, I will just be done for the day. I mean, I could go shopping at the mall and it'll be less expensive than me sitting here and having a bad day at trading. I could go get myself a massage at the most expensive, like, spa in Chicago, and it's less expensive than me sitting here and trading during a bad day where I'm not in a mental state. So you really have to have something that gets you up and away from your desk when you are making mistakes. And then you also have to be aware of what are those mistakes that you're making. Are you on other streams, or do you like have a life? I don't have a life. No, just kidding. I have my own stream that I do. But I've been, it's not big or anything. It's Ninja's big. Ninja's the king stream here. But yeah, I have a stream that I do.
Yeah, I'm not on any others. It's where you can find me trading, and I think it's been a good balance. I've actually been really trading primarily only on stream. Like every once in a while, I'll take more trades if I'm not on the mornings or stuff. But I think it's helped my mental really only focusing like actively on the markets on sessions or during sessions where I'm about to be on stream. It's just been better for me. I've been focusing my other time to work on other things, other side stuff that I'm kind of doing on my own time, and I've just felt better overall about it. You guys remember I really didn't trade much all of December. All right, this is just pissing me off. I'm going to get out of one.
Yeah, we're sitting on the midpoint from the RTH low is at 25,351 in the NQ, and that just is really where we're stalled here.
I think I had to cover one just for something to happen.
Sometimes that's it. You got to fake them out, make them think that they got you, and come back for more.
I mean, if I hate covered, we'll probably go down to 150.
Good.
The chat is just waiting for me to flatten out so that we can actually dump this. No, we're just in the very tight little value range here on NQ of 50 points basically for the session. So we're holding the overnight VWAP for the moment. What is ES doing? Absolutely nothing.
Yeah,
Stuck in a 5-point range.
I had a feeling today was going to be like this. Good longing opportunities in the morning, and for me, it's been patient to have an entry since then. I'm not sure what you mean by cover a position. Are you referred to like taking a position off or a short? You don't cover a long. You cover a short. Also, the time frame of which I trade is a lot different than many of the people on here. In a sense of I use wider stops and wider targets and trade more markets. See if my YM can come down. Russell and making a new high of the day here. Nope, you're not missing anything.
Yes, we are still inside the 30-second OR. Probably is a good sign for everyone to go get away from screens during the lunch hour.
How big is the 30-second OR?
On NQ, it is roughly 40 points.
It's pretty big.
Yeah, like 42 points.
I don't have like I mean, as far as like risking per day, there's like what, like a max loss per day? There's like a risk per trade, like max loss. Like I said, if I take 3 stops in a row, I will just call it a day. I risk anywhere from literally 0.25% to 2%.
Hey, Nick,
Like,
could you
rarely
have
2%.
could you have NT make a strategy where it auto places a limit at your stop when you're on stream, please? I want to test it on sim. Unfortunately, that level of alpha is not available in any sort of indicator. In fact, I've already patented said idea and it will never be available. The only way to find those specific entries is to tune in here on NT Live every day of the week, because I'm on 4 of those days usually. I would love nothing more than for this to go to 35s. Let's do that. Let me cover another one, and I won't feel bad about this trade for the rest of the session.
My X account is my name, Jack Gleason.
Do I have a strategy for NT that wins 100%? Unfortunately, no. If you watched last Thursday's trade with Jack and I in the morning, you saw me take about 4 stop outs and was down $2,000, and I decided just to let that ride for the session because I was not mentally feeling good about my trades that day. Just not the best entries. So I took a red day. Definitely do not hit all of my trades.
Yeah, that 100% win strategy, you probably got to, I think it's a $50,000 course to get that. But let me know when you find it.
Oh, you're trolling. Got it. No, guys, at this point in my influencer career, whatever you want to call this, streaming career, I have had no problem losing thousands and thousands of dollars in front of you people every single day. Just is what it is. I'm pretty numb to it at this point. There's one. All right. All I had to do was cover that one in the 70s for this to finally roll over. How do you bear a losing day and leave the table? I mean, it's just part of the game. You have to, I think that side of the mental of this sport is really important. You got to be okay with those days and not try to barrel your way back to green. Like sometimes it's one of those where the tape's moving. I didn't think I had bad reads last Thursday. I just could not seem to time my entries well enough to be on the side when it finally did go. I just kept getting wicked out and then try again. Same thing happened. And then eventually it went. So it's like my thesis was not wrong. Just it could not execute. And when that happens, it's just, I'm not forcing it anymore. Go back to the next session.
Yeah, the other thing you have to think about, like if you can't have a losing day, then this might not be the game to play, because your outcome is based on, a large series of trades. It's not based on one individual trade or one individual day. There's not a individual trader that's never had a losing day. So the thing is, you got to ask yourself, are you having an absurdly large losing day? Is your losing day 4 times bigger than your winning day? That's a different question. If you're allowing yourself to lose significantly more on the days you lose than you are when you win, that's a separate problem. Decent reaction here from the YM.
I'm actually going to take profit on this runner. If we get back over 400s, the trade obviously is dead. It's very hard to back test scalping strategies, as that's all more likely the moment you get caught trading. How do you do your back testing, Nick and Jack? So I'm one of those traders who doesn't back test. And I've just never been that person. Just kind of the way I execute. Like I don't have a refined strategy like that I'm like, oh, okay, I back test to a specific risk reward. I honest to God, guys, I trade much more on just pure vibes, if that makes any sense. No back testing needed, but I do go to therapy instead of back testing.
The shrink.
Yeah. Therapy is my back testing.
Yeah, so I don't scalp, but like you can back test. So like if you have a fully automated strategy, which I have a few of, but a fully automated, I'm not a coder. I've worked with them. I've built fully automated systems, and fully automated systems are a one-click back test. It's really easy. You can see the very hard data. But when it comes to like execution, which really is the difference in traders, is your ability to execute. You can go back and look at the setups that you'd like to take, and I've done enough of that. Like my whole system has been built over the course of 15 years of staring at the markets. But as far as executing that in real time, whatever I backtest is irrelevant if I can't actually execute it. So if you have a fully automatable system, you can backtest it. But unless what you have is like fully automated system, your backtesting is not going to come out like your results.
Yeah. I just use statistics and things that people I've read or I've heard people state, or I've seen the data behind them. So it just kind of enhances probabilities of setups, but it's not like that is my only strategy that I can back test for hours and hours kind of thing. It's just not the way I've ever traded. I don't have any completely like, yeah, there's situations where it's like, oh, we're going to, in the first 15 minutes, maybe we sweep the overnight low, and that back testing getting long, once we start trading above it at NQ hits whatever percentage of the time. That's just, I know it's a high probability setup kind of thing, but I'm not here to take that every single time the same way that back testing makes sense for it.
Yeah. And yeah, somebody mentioned 20, 30 trades. Yeah, if you want it, you can forward test, you can forward test your stuff, executing a live market. And I think once you have 20, 30 trades, like that is like a decent amount of data set. But like I've literally ran fully automated simulated back tests that I can just one click and hit back 5 years, and it's done in like 6 minutes, and I'm like, oh, look at all this data. But like is that like, am I going to be able to execute that as a individual? Unless it's fully automated, you can just back test at what you're doing and your assumptions are great, but it's the execution that's going to separate your P&L from being a winner to a loser.
Did I take this short based on order flow? Yes. Order flow slash support and resistance. So that 420 level, like I said, I made the joke yesterday, but for some reason it has been support when we were above it. It has been resistance, at least since we've rolled onto this contract, that 25,420s area. Like I said, I talked about it yesterday and I was kind of joking, but also not joking. That is a longer time frame kind of pivot type level, if that makes sense. Yesterday afternoon, we talked about it. So it's marked on my 4-hour chart, and it has been for, oh God, several weeks. If you kind of see, that's on a longer time frame and see the range we've kind of been trading in. It is basically the bottom of a larger balance that we've kind of been in. So yeah, a couple reasons I was entering this, but there was not much interest building any sort of volume above yesterday's high as well, which is where I got short in the first place. Oops. I have to actually jump back to my screen.
This scenario that is fully automated, I would not tell you. Sorry.
That kind of defeats the purpose.
Yeah.
Jack is allowed to gatekeep his automated strategy.
Because it could be automated. It's the whole point. You got to do that work.
Yeah. Can we just break this a little lower? Did we really just bounce off 35s again, Jack? Yes, we did. I hate it here.
I don't know, man. I got long at YM, so kind of want us to go back up, but I guess the NASDAQ can do its own thing while the YM moves.
Nick, how can we copy your chart setup? So you could do variations of this, depending on if you want the freeway or, to have truly my indicators and my charts. My candles repaint based on 500 volume candles and delta extremes on those 500 volume. So when one side is heavily pushing over the other, the delta profile as well as the volume profile, you would need the order flow edition of NinjaTrader, and you can build that yourself. And then the MGI, you can get some of this for free right now on orderflowlabs.com. There's a premium edition that has the weekly market generated information level, which has a bunch of good stuff. But if you're using NT, this just auto plots the MGI data and like VWAP and all that for me, the opening range. So that would be where you could start. But yeah, if you have the order flow edition, you can build some of this yourself too. But I believe somebody in the chat, there is a delta profile indicator that is available so that you can, it won't give you the pure leg to leg. You'd have to build that yourself, but it will give you at least this visualization. My DOM is going to be free. So you may have seen Leo show it on here, but it's currently in beta. We opened it up to people that were participating in the arena competition last week. So some people are helping us kind of test it out, and that will be free and globally available here in the coming weeks. We're still kind of working through some things, but we're getting some good feedback, and it's been awesome so far. So more to come.
Yeah, I can't come over to anybody's house and trade for them, but you can jump on NinjaTrader Live and watch me about 4 times a week, which is, I feel like, a decent amount. But yeah, nice. That limit order there at 50,342 in the end in the YM. That just traded since I got on stream. Nice pop there, instantly up 80 points. Going to be able to move this stop up. Hopefully it keeps going my way. So we shall see. At some point, if we can get more subscribers, so anybody new here, because I saw some other people say they were new here, if we can bump this up to 200, I think we're going to rent out the Sphere in Vegas and then just throw a massive trading competition in the Sphere. I haven't confirmed this with absolutely anybody, but it could happen. Trading competition in the Sphere, Nick, you down? Just a dome that just is 300 yards long.
I mean, I'm down. I think we need to do a meetup in Vegas anyway. That'd be fun.
Oh man.
Nick, does the new DOM show orders that weren't filled? Yeah, if you need level 2 to really, I think, get the most out of the DOM. And if you have the full depth of market level 2 data, you can see orders that were not necessarily filled or partially filled with the new DOM as well. But yeah, you can, I would highly recommend anybody that's going to be playing around with the DOM, if you've never kind of spent a lot of time using it, watch some of XYZ's videos. He does a very good job of breaking down the madness that you're kind of seeing. Because when I first started learning how to like read time and sales and read the DOM, read order flow, it is the most like insane looking thing and it makes no sense. And there's a lot of noise, but he does an outstanding job of kind of breaking down via replay mode, like what these things mean and as they're happening. And there still are always going to be false signals and things. That's why you see us get stopped out of trades, even when we think we're reading something. But that's a good place to start too, because he reads it better than I do. That's for sure. I'm really not a fan that we keep bouncing on this 330 level.
Yeah. We're just kind of building that structure higher. We haven't gotten any liquidation breaks. This morning when we broke below that overnight low, immediately bid back up. Just doesn't seem like it's set up for a run down. If we could like jump back above maybe the prior day's high and then like get rejected again, either that or it's a slow drip here. It's a tough one. I mean, it's still making lower lows and lower highs though. I don't know. I could see us getting back down to 25,300. That's kind of where I would be looking long again personally. But not touching it here.
How about some new lows on the session? Or at least just push down to like 310s and I'll cover there.
If we get new lows.
If we get new lows, we're probably going to 150.
Yeah, I was going to say, if we get new lows, I think we're going back to like 25,120 area, but.
Yeah. Oops.
Let's see if I can do a Stowe impression. A new low would be encouraging.
Yes, it would. And don't miss today's Trade the Close with Leo and Kane. It's always a lot of fun. Okay. Can we push lower?
I like how you're short and it's going your way, and I'm long and it's going my way. That, ladies and gentlemen, was what you call market selection. See, Nick is shorting the weak market. I am longing the long market. They're both indexes. Market selection, ladies and gentlemen. Don't know who that is. I'm sorry.
Guys, I have no idea. I don't make any decisions.
Except trading decisions.
Can we please break this lower? I'm getting frustrated. Everybody start selling this. I am not covering so you all can short. I mean, the alpha was given, the 420 alpha was given yesterday afternoon, as well as soon as I was on stream. You guys could all be along this party with me instead of waiting for my stop to get hit like that always happens.
Yeah, that's like bullying.
Yeah, I will not be cyber bullied on my own stream.
Man, this YM making me feel smart.
Jack, can you explain your limit order in YM?
So I shook my crystal ball and I was like, we are going to be coming into a level that's going to immediately bounce. And then I placed the limit order. So when I came on the stream, I was doing some analysis. The YM on Friday was, looked at that chart. So I'm always looking at all of the different markets. Friday, the YM just was blasting to the upside. We were outpaced by the NASDAQ yesterday as it kind of played catch up. And we set up with a really aggressive opening drive well above the prior day's high in the YM, proving that buyers are still there and wanting to take that market higher. So that is what took my eyes on the YM. I was watching the YM. We opened above the prior day's high and we bid straight up for the first 30 minutes. And then I was really just looking for a pullback area, and I figured I might as well put my buy order right where the low was going to be. So I put my buy order right where the low was going to be, which is, just the beginning of this breakout candle. And when I get in trades, I've said this a lot, I like to give it some time to go my way. That's a great reaction. We just put in this blue bar on my screen. I refer to that as a trend bar, which is an indicator that I've built that confirms, that there's a trend going on based on some criteria. So I'm actually going to aim for new highs. When I got in this trade, I had a bracket order. When I place a bracket order, my stop is the same size as my target. I just move it around just to have a stop and a target in. It keeps the order management easier rather than like mess around with limits later. But when I get in that trade within 25 minutes, I picked up that long about 20 minutes ago. And we're 140 points off my entry in 25 minutes. That gives me confidence to hold this trade for new highs. I'm moving my stop up in this. As opposed to the gold market, which is not really doing anything, which I don't really like. So I just moved my stop up again. My confidence is not extreme there. If we broke out of this little wedge we're building, sure, but we're just doing nothing. So yeah, the first, I think the most important thing in my strategy is market selection. Because if you don't pick a market that's trending, it's hard to get in a trade that's trending, regardless of where you enter. If you are buying a market that is aggressively being bid, you're going to be much more forgiven in any long you take. If you are shorting a market that is aggressively bid, you will not be given forgiveness. If you are buying a knife falling, you will not be given leeway. So selecting markets based on their trends and just, knowing where they are, knowing how they're moving. There's 4 different indexes. They do move differently. And if a lot of times when the NASDAQ's moving, other things aren't, or the Dow might be moving and the NASDAQ isn't. Like that's the case today. And if you're not watching those markets and flipping, I'm flipping back and forth between markets every hour I'm at the desk. I'm not just staring at a screen, looking at 5-minute bars as if every one matters. They don't. They're irrelevant to my decision-making process. There's a much bigger picture you need to see.
How about one more little flush here down to like the 310s? Do it for daddy.
Do it for daddy.
Daddy's home. Nick, I signed up for the Arena Cup with Leo's link, but didn't get the beta DOM. Do you know if it's still supposed to go out? I thought we were, but maybe we haven't released it to everybody that signed up just yet. I'll ask Leo, or if you don't get a response, well, because we're about to jump off the air here in a few minutes. Yeah, come back this afternoon and ask. I'm not 100% sure, but I thought we were giving beta access out to folks already. Maybe not. Don't quote me if I'm wrong. Okay. Thanks, Dave. So maybe Leo was going to release it this week.
Can you explain how the RTY trades? It seems more NASDAQ-y than the NASDAQ. Sometimes it is, sometimes it isn't. Today it is. The NASDAQ, for what I mean, I can't tell you. I don't really try to think about like why things go up or down. I just pay attention to when they do. Because I don't know, and you're never going to know. And the only thing you can do is speculate on why we think things are going up or down. Like we could say, you know, who's actually, I'm blanking on his name. Craig is great at explaining those things. If you want to know why things are going up and down, you talk to Craig. You don't talk to me. I'll tell you where I think they're going up and down from. But Craig has, you know, much better fundamental overall picture analysis, and he could maybe give you a reason why the Russell's more NASDAQ-y than the NASDAQ, which I assume by saying that you mean volatile. But that's not always the case. I just literally look at 15-minute charts and I scroll through every market I trade, and I just set alerts. And when those alerts get hit, I trade that market. And then you gotta be paying attention. Like I knew I wanted to buy that 50,342, but how many times do you tell yourself you want to buy a level and then you don't because you're not paying attention? That's all. That's the only thing that's harder about trading multiple markets is you gotta be looking. You know, you're working, but if you're just if I'm just finding myself staring at one screen all day, like, am I really like doing anything? Like my brain can compute more than one thing on higher time frames.
Sellers are going to let me down, aren't they? They are going to let me down. I feel it.
The thing about adding to winners in futures markets, like you're moving up your cost basis and you have to move up your stop with that. Futures do a lot of backing and filling. Adding to stocks is much easier because stocks have a tendency to run a lot harder than most futures markets do. Futures markets are pretty much a back and fill instrument. So there are only very rare market conditions, in my opinion, like can you add, or maybe you start with a smaller size position, but every new add, if you are adding the same amount as your original size, takes your average to the 50% of where it added, which I like to be. I like that area to kind of be my entry. So I don't do a whole lot of adding.
That's what I want to see. Come on, sellers, push.
And if I am adding, it's like I'm typically adding like quick, like I'm in a trade, it reacted to a level I anticipated a high reaction, and I just add really, really quick, and I'm like, I gotta be right away. It's not like you don't see the NASDAQ like trending and then decide to like just buy, because I mean, once you've been trading futures long enough, we back and fill, especially the markets, the futures markets back and fill. They do not trade like stocks trade. Stocks can just rip and like not come back. Futures markets rarely do that. And if they do that, that's because somebody's really, really wrong on something that nobody saw coming. And then we're really, really moving fast. And it's also probably pretty hard to add. So I think it's just easier to stick with the same size and remain consistent. Unless you have some data that shows that your ads improve your profits, sure. But I can't tell you how many times I've added, just brought up my average, took myself back to break even, then ended up getting out of the trade. And if I just actually kept my original position and my original size, it would have been more profitable. But I don't have a specialty in adding. And I don't like adding to losers. Just like everything else, there's not a mistake I haven't made. Of course, I've done it, but it's not something I like to do. If I'm doing it, I start thinking to myself that I'm probably not trading my best. All right, we got 9 minutes left. We need to get these likes above 650. They're at 590 now. I need 60 of you to band together.
There we go.
And pump those numbers higher. How many red days in a row for you to stop for the week? I mean, man, if I have back-to-back red days, I'll probably still trade a third. And if I have a third red day, I there's something seriously wrong. And I probably won't stop trading. I'll just size down. It's more of a size down than stop trading for the week. Unless I feel like if there's like something, like there would have to be something mentally wrong with me. Or I would have to be completely deviating from my system. If you trade one product with a few number of occurrences, meaning you're trading one market, let's say 1 or 2 trades a day, it's easy to have multiple red days in a row because your number of occurrences is lower. So your probability of having multiple red days is higher. But if you have multiple markets, like I trade multiple markets simultaneously, so that has decreased my probability of continuous red days.
Hey guys.
Hey Jim.
What's up, Jim?
How's it going?
It's going.
I'm going good. Going good.
Looks like, Jack, you're in a couple trades right now.
I am. I've been in gold since I got on and it's gone nowhere, but I did bottom tick this YM entry on stream. So I'm just I'm gonna move my stop up here and I'm hoping for new highs. I was really liking just the way that the YM broke out, NASDAQ and the ES. I had an ES earlier before I got on stream, got out of that trade, but they're kind of dead in the water here for me.
Yeah. Well, let's see what happens this afternoon. Anything could happen. Nick, are you in a trade right now?
Yeah, I'm short from the highs again in NQ.
Oh. From the highs, huh? Nicely done.
420s.
Yeah, interesting day today. Well, we have non-farm payroll coming out tomorrow, so there'll be some fireworks undoubtedly tomorrow morning, 8:30. Well, great job, you guys. Appreciate you being on NinjaTrader Live. Thank you, everybody, for listening, whether you're in the chat or not. Appreciate the chat. Also appreciate the subscriptions and smash that like button if you can. Greatly, greatly appreciate you guys being here with us today, watching these guys trade live in front of everybody. Just displaying it all. laying it all on the line. I think that takes some courage. I appreciate you guys doing that.
Thanks,
Yeah.
Jim.
That's what we're here for.
Well, chat, I'm going to flatten this out so I don't have to think about it for the rest of the day.
There you go. And I do want to reminder, early start, remember, 2 o'clock start in the afternoon, NinjaTrader live stream. And we have the Big Cat and Kane, along with the special announcement coming up this afternoon. You don't want to miss the special announcement. I could guarantee you that. I'm finally clued into what it is. And it's going to be definitely awesome. Having said all that, guys, will I see you guys again this week?
Yep. Back tomorrow morning.
Nick is back tomorrow morning. How about you, Jack?
I will be back tomorrow, I think, for Trade the Close, and then Thursday morning. They got me working double time.
Awesome. Well, let's give these guys a round of applause, please. Appreciate you guys doing this. I'm going to hop into a Edge report. I look forward to talking to you guys tomorrow.
Thanks, Jim.
Take care, Grim.
All right, let's check out Treasury bonds are on the move. Finally, me and Deli and Craig and Shai have been talking about this for, well, over 2 months now. We finally have a breakout to the upside. Now, we do have a double top up here at 115 and 1930 seconds. Remember, this market is traded in 30 seconds. Each tick is worth $31.25, and a full point is $1,000. In any event, this is a substantial breakout today. My guess it likes the prospects of a bad non-farm payroll number that's going to put the squeeze on the Fed. And there we have it. We just popped up here. We hit that double top that we achieved on that swing high on the 15th of January. So we'll keep an eye on that. We'll see if we have continuation buying or if this is just a double top and we settle back down in the consolidation range. Anything could happen, but I do expect some excitement. I do want to show a special tool also today. I'm going to move over a new chart that I just made, and I'm going to expand it all the way across. Well, maybe that's too much. Let's go ahead and just position this as a normal chart on the screen for now. And this is an E-mini S&P chart, and you could do this on any instrument, any market that you want. And I added this new tool, and it's called the percent change tool, or the percent change chart, however you want to do it. And you could compare different instruments. You could set a start time, and then you could compare different instruments and see what the percent change difference is. And in this example, I added this. I added the stock index futures. Right, we have the Russell, the Dow, the Nasdaq, and the E-mini S&P, and I anchor dated it for today. Now I could anchor date it from whatever start time I want. I could put it on a daily chart. This just happens to be on an intraday chart, and I just wanted to see, all right, what's the percent change, anchored from today, and it kind of charts it out going forward here. And someone might ask, well, what do you need this for? Well, it gives you some kind of helps me with my bias, right? We talked about why is Russell so strong? Why is YM so strong? Why is the NQ and ES a little not quite so strong? Well, you could see it graphically represented here on the chart, right? And one might say, well, let's just check the equal weight futures while we're at it, which I did a couple minutes ago. And this is the strongest index that we have right now, up 0.66%. What this is telling me is there's rotations, right? There's rotations going out of tech, rotations going out of the big S&P, going into the small cap, and going into the Dow as well. And so we could graphically see that, and we could see when it happened, when that changed. We crossed over right at 9:30, right when the bell rang. So you could do this kind of percent change with, you could do gold, silver if you wanted to, or you could do crude, nat gas, or whatever you want to do it, however you want to do it. And really quickly, I just want to show you what it looks like in the indicators section here. And this is it. Now, by the way, it's not on the website yet on NinjaTrader for the desktop, but if you want to get it, just send if you want an early peek at it, just send an email to learn@ninjatrader.com, and Mike Burke will shoot it out to you, and you could just install it on your desktop. But in any event, you could, whatever symbols you want to compare, you put up at the top, and then pretty much the rest of it is formatting. Now, anchor date is right here as well. So if I had a daily chart as an example, I can go ahead and let's do that. Let's do a daily chart. I'm going to cancel this. We got time, right? Yeah, we got time. Let's do this. I'm going to change this to a daily chart and click on that. Now, I am going to go to my indicators, and I'm going to change my anchor date. So I'm going to change my anchor date to the beginning of the year. And that would be February 2nd. Remember, there was no January 1st, the markets were closed, so we'll set it to January 2nd. I'll hit apply. And okay, and now I can see which one's stronger on a percent basis for this calendar year. And you can see the Russell 2000 is up 8.22%. The Dow futures 4.43, even the S&P 1.28, and the Nasdaq is actually down 0.56%. So tech stocks not in favor yet. Small caps are in favor this calendar year. So you could literally see this rotation happening over the calendar year. Again, learn at NinjaTrader.com, and you guys could check that one out. Super cool. In any event, appreciate everybody being here today. Remember, big day today. So looking forward to everybody being here this afternoon. 2 o'clock start with Shai and me, and then boom, get Leo and Kane and something a little bit extra. Having said all that, everybody, appreciate everybody being here. Thank you for the subscriptions and the thumbs up, and have a great relaxing lunch, and we'll talk to you this afternoon.